Good morning, everybody. How you guys doing today? Gary, nice to see you back in the room. Ace J posting pictures. I like it. Ziba, I see you're working hard too. Very good. Good morning, guys. We're gonna have a great day today. It's nice to see you all here. Small crowd. I think people are still gonna file in for a second. That's cool. It happens while people are getting in and getting situated, guys. Let's check our news, right? Um, forexfactory.com/calendar, taking a look and making sure that there's nothing going on in this wonderful world that may make the market change directions without notice, spike, move too fast. If you were watching at 8:30 a.m. when the unemployment claims came out, the markets moved pretty quick. I was watching NASDAQ and it bounced and it did stuff. It was kind of cool. The patterns, everything that we teach still kind of fit the bill, but it moves so fast it would have been difficult for the average human to trade. So we don't worry about what's being said as much as we're concerned about something is being said that can make the market move, jump, bounce, do all those things that we don't want it to do. It's a great opportunity to go refill your coffee, to call your spouse, tell them you love them, scratch your dog behind the ears, or stretch your legs, right? So every morning I come through, and this is part of my routine. I'm making sure that I'm just checking news and making and seeing that there's nothing really crazy going on in the wonderful world. Um, Looking to see how many new folks do I have today? Not a lot. Not a lot today. We got the usual suspects, which I enjoy having all the time. Ace J, you're on your way to becoming an ace. I like it. Paul, I love the dice in your um, your little avatar there. The panic button, right? We're gonna learn how to avoid that panic button. Let's go to the educational page, guys, and let's talk about everything that we're going to discuss for the first, I don't know, 30 or 40 minutes of class is going to come from the educational page. And I want to remind you guys that what we're doing here is building a foundation. We're creating this platform so that ultimately everything that we do becomes easy. And that's kind of the goal. And we're going to go to the tutorial section. And I want to remind you guys, it doesn't have to be difficult. It doesn't have to be stressful. It doesn't have to be anything other than mechanical and methodical. And it's kind of cool how that works out. I know some of you are probably close to my age, and this is an analogy. I was trying to explain it to someone last night. For those of you that are in your 50s and 60s, kind of right in that area, you may remember back a long time ago, there was this thing called Atari 2600, right? It was like the first real video game that came out, and you could plug it into your TV beyond Pong. Um, Guys, video games were huge in the 80s. That's kind of when I was a kid. And what we found is that there were patterns to each video game to create success, right? There was a Galaga machine that would go to the arcade, and if you followed the pattern, you could get unlimited lives. You could make them stop shooting. There was a Pac-Man machine that if you followed the pattern, you would never die because there was this pattern ingrained that was proven to make you successful. You'd get the high score every time. Guys, trading is very similar to that. Trading is patterns. Trading is recognizing a pattern that has been proven to bring you success and then committing yourself to that pattern, committing yourself to the repetition. And what you found is on those video games, the second you strayed outside of that pattern, well, maybe you lost a life, right? Then they started shooting again. So think about trading in terms of when you're following these patterns. It's almost like a video game, and it's going to make you successful. But instead of being created for children, good morning, Jose. This is an opportunity for wealth. This is an opportunity for you to quit your job. This is an opportunity for you to buy an island in the middle of the ocean, have pina coladas, and trade at your own leisure. And that's kind of what we're going to do today. And we're going to talk about initially, excuse me, a high probability trend trade. And this is a trade that typically repeats itself, I don't know, 4 to 7 times a day, depending on the day. I've already taken one today, so I know that there's at least one in there today. Um, Great, I'm halfway to my goal already today, which is nice off of one trade. Good morning, Abdulaziz. But guys, a high probability trend trade is defined as when each indicator on every chart agrees for the trade. Your triggers are going to be their strongest. No termination conditions exist. And there's no trouble spots between your entry and your target, guys. And we focus on this high probability trend trade because one, it's been proven to win more than it loses. It has been tested over the years, and the analysis has shown us that when you follow the rules for this trade, this is a trade that typically wins 70 to 80% of the time. I want to remind you guys, you adrenaline junkies, that the goal of trading is to be successful. The goal of trading is to win more than you lose, and the goal of trading is to make money. So the idea is to formulate a plan that has been proven to make more money more than it loses money. That's where this high probability trend trade comes in. And what you're going to find is that when you learn this high probability trend trade, when you start to focus on the advantages that it presents, it's going to teach you to read your charts. 90% of your day, every day, is going to be reading your charts. 90% of your day is going to be looking at these indicators, reading your indicators, and understanding what they're telling you. And you are going to fluently be able to understand really within the first 30 days where the market is likely to continue, and you're going to be able to use that continuation point as an entry for a high probability trend trade. You're going to understand where the market is likely to go. You're going to use momentum, you're going to use Fibonacci, and guys, this is going to help you pick intelligent targets, right? Knowing where the market's likely to go, and you're going to have your target sitting there waiting like a catcher's mitt. And you're also going to be able to understand, and most importantly, I think, where the market is likely to stop. And these are what we call termination conditions. A termination condition may reverse the market. A termination condition may create a bounce too large to trade. But guys, what a termination condition is, it's a Fibonacci area that the deep pockets investors, that the institutional traders, that the people that actually move the market are most likely to react to. So Nexgen users have the advantage of identifying these areas before the market ever gets there, recognizing them, and then making a choice to not trade into them because they can be trend enders. So we're going to learn to read charts this morning. We're going to learn to recognize these three key concepts: where the market is likely to continue, where it's likely to go, and where it's likely to stop. And we're going to do this with one trade. We're going to do this with that high probability trend trade. And this high probability trend trade is only three rules, guys. I want you to resist the temptation of adding rules, of adding things to this simple process until you've mastered the simple process, guys. And the average user, it'll take anywhere between 3 days and 30 days to fully understand the rules, and then it's repetitions and it's practice and it's getting yourself to where you're comfortable with them. A trade really is nothing more than three advantages put together to create that trade. It's going to be a momentum, it's going to be a clear path, and it's going to be an entry area. And what you're going to find is these three advantages become present when the three rules are met. So we're going to talk about the rules, we're going to identify them, where to find them, we're going to practice them, we're going to learn how to study them, and we're just going to go through repetition, and we're going to create recognition through this repetition. Your three rules will be met on only two charts. I'm going to tell you right now, you're going to see people in this room with three charts, four charts, right? And what you're going to see as well is that the average person can't process all that information when they're brand new. This is why we keep it simple, guys. When we keep it focused on these simple advantages, it relieves you of the burden of looking at so many things and thinking about so many things that you begin to confuse yourself. So we're going to keep it super simple. Large chart. This is your big chart. This is the overall opinion of the market, guys. This is going to define the direction of the market. This is going to define the momentum in the market. And this is also going to define the areas that we're respecting and recognizing in the market. Your large chart is a broad stroke of a brush, guys. You're going to get all this information on one bar. One single bar on a large chart is going to help you define direction, momentum, and areas. And it's showing you that opinion of the market. It's letting you know what the people that move the market believe the market should be doing. Your first two rules are going to take place on this market. You are going to identify, hey, good morning, Debbie. You're going to identify momentum and make sure that you have that advantage in place. That's rule number one. You're also going to make sure that there's nothing between you and your target, making sure that you have the advantage of a clear path. That's rule number two, guys. Two-thirds of the advantages that you're going to give yourself every time you take a trade are going to come from just one chart, just from one bar on one chart. When those advantages are in place, you're going to turn your attention to a smaller chart, to a faster chart. And this is your refinement chart. And I want you to write this down on a piece of paper. This is an entry chart. The large chart leads the way. The large chart tells you which direction the market's moving. The large chart tells you that it's moving that way with tremendous momentum. And the large chart tells you that there's absolutely nothing in the way. The small chart is just going to whittle that broad stroke of the brush down and help you find your entry point, that point where the market is likely to continue. Jay Solar, it's never a problem to interject. What market are you talking about? Because it makes a difference. And this is a great question because Jay Solar asks, should we use the 13.2 as the large and the 5.1 or the 34.5 and the 13.2? So Jay Solar, on the S&P, the 13.2 and the 5.1 works great. The S&P is a smooth flowing market. It doesn't have the volatility of NASDAQ. Crude oil, same thing, 13.2, 5.1. Guys, it's going to create more opportunities. It's a great learning platform. The NASDAQ, however, Jay Solar, is going to be a faster moving, more volatile market. And what we have found and what John Novak has found through extensive study is that you can take the exact same concept, the exact same rules, the exact same looks, but if you put them on a 34 chart as your large chart and a 13.2 as your small chart, you can trade the exact same patterns and use the exact same advantages, but it slows the market down a little bit. Everything that we teach, guys, good morning, Safia. Everything that we teach is applicable on any time frame, on any market. Guys, we have people trading their stocks, trading their futures, trading cryptocurrencies, right? Using it to hedge options. Hey, good morning, Levon. So Jay Solar, what we do is we focus on the patterns, and the wonderful thing is John Novak creates the workspaces for you. So if you're on the ES, it's going to default to that 13.251. If you're on the NASDAQ, it's going to default to that 34.5, 13.2. And guys, I'm going to give a little warning for my new users that really want to do what everyone else in the room is doing. The NASDAQ is a very fast market, and the NASDAQ has a personality all its own. It's kind of like that, I don't know, it's like a weasel hopped up on caffeine, right? It moves fast. Learn your lessons on the slower, easier charts. Learn them on the 5.1 and the 13.2 with crude oil and the ES, and then take those and apply them to the NASDAQ after about 30 days and simulate the NASDAQ. Make sure that you've got it down. But we're going to do two charts, guys. Momentum and a clear path come from the first chart. Your rules for entry are going to happen on the small chart. You're welcome, Jay Solar. It's a great question. Guys, I'm going to encourage you. Interject. Always interject. If you're wondering something, if you're curious about a concept, it's okay. Pop it in there. So 3 rules. And guys, I'm going to type this out in bold letters in the chat box if you're looking at it. Keep it simple today. Keep it simple. Keep it focused. Keep it easy. Don't stress yourself out with trying to know everything on day one. We're going to eliminate as much noise as possible. We're going to get straight to the targets, guys, and what we're going to do is we are going to build a foundation. Together, we are going to create this amazing foundation that's going to give you a path to success, and this basic foundation is what you're going to grow from. You will not be in first grade for the rest of your life. The more study, the more repetitions you get, the more you're going to recognize these concepts, and the quicker you're going to recognize these concepts. And I'm going to put my favorite picture in the world up right now, guys. This is your path to becoming a confident trader ASAP. Your path really has 2 very key elements. And the first one is that you're taking pictures. I want you to be a photographer. I want you to take pictures every day. Guys, you have capture software. It was downloaded when you got the software. If you go to your search bar and you type in tech or TechSmith or Capture, it's going to bring it to you. I want you to open it up right now if you've never used it. There's your icon down in the bar, and the Capture software is a giant red button, guys. Let's do a quick tutorial on how to use this Capture software, because I firmly believe that there isn't a more important skill than taking pictures, because pictures are how we have a conversation. So if I click on this great big red button that says Capture, and I hover over one of my charts, it's going to give me only that chart. But what we want, guys, because it's a two-part process, right? I'm going to left click in the upper left-hand corner of my large chart, and I'm going to drag it to the bottom right of my small chart, making sure to get my timestamps as well as my prices. Once I have those in view, I'm going to release the mouse, release the Kraken, and it's going to give me the option to capture an image. If I click on capture an image, up comes my image preview. Right now, I have everything that I just saw within that preview pane. I've got my large chart, I've got my small chart, and I've got some tools to identify the different things happening. For example, I can use this shape tool, and I can highlight maybe an area where I know I shouldn't be going short anymore. I also have this shape tool, and I can talk about problems that I see above me. But the most important thing that you can do as a brand new user, and for those of you that have gotten accustomed to kind of phoning it in on writing your rules, I want you to do this for me. There's only 3 rules. I want you to write on your chart. I want you to write your rule number 1, and then I want you to draw an arrow to it. And then I want you to use in a separate box another arrow and another chat box. And I want you to write out rule number 2 being met. And then finally, I want you to come to your small chart, and I want you to write out the rules for rule number 3, right? Write them out. Hey, good morning, Lady P. You sound so regal every time I call you Lady P. I picture you in an old Victorian dress or something. Lady P has arrived. I love the usernames, guys. They're fun for me because I've got a crazy imagination and I make everything artsy fartsy. I want you to write your rules, and I want you to point to those rules being true. And guys, I know this feels a little arduous. This feels kind of like, oh man, he's giving me all of these things to do. But what you're going to find is that if you clearly define in words why you're getting into a trade, it's reinforcing the rules that are getting you into that trade. It's reinforcing the looks associated with the rules. And guys, this is going to accelerate the process of getting to where you want to be, accelerate the process of recognition. And that's the goal, right? To become a successful trader as soon as possible. So when you've written your rules on your chart, I want you to do one more thing for me. And this is going to seem silly. Tell me how you felt, right? Were you nervous? Were you anxious? Were you uncertain? Or were you confident? And what you're going to find is the way you feel going into a trade reflects directly to your ability to follow your rules. Whether you are knowingly breaking your rules or accidentally breaking your rules, your heartbeat is going to tell you if you're doing things correctly. I've seen it 1,000 times. So I want you to take this. I want you to write your rules. I want you to tell me how you felt. And then I want you to come down here to the bottom right and click this copy button. And I want you to take that copy button and drop it right into the room. And now what's going to happen, guys, is I tell people every day, do me a favor, write your rules on your chart. Every day, I open up this annotation picture. I say, write your rules on your chart. And there's going to be somebody that decides that they don't need to write the rules on the chart. And these are the same people that are struggling. There's a definite correlation. So guys, I want you to hit copy and drop it in the room. In our first hour, we're going to talk about rules. Our second hour, we're going to break into looking at everything that you guys are posting in the room, and we're going to talk about what you see and what you're doing. If you don't tell me why you're doing what you're doing, I've got to sit here like a Yahoo and guess, right? Some of you, I've seen your trades enough that I begin to understand what it is you're looking for. But if you're brand new, don't skip this validation of your rules process. If you're not winning consistently, don't skip this part. It's going to pay dividends. You can also upload your picture by clicking that blue button that says upload, and it's going to give you a link to screencast. You can see that both Jakesh and or Jay Solar and Rakesh, I combined your names, just posted those. And if I click copy, I can put that link in the room as well, and that sets me up so that um, I can wait, get that clicked on, and then we'll have a conversation about anything that you guys post in the room. If you have a question, take a picture of your chart, write your question on your chart. Guys, this is how you and I have a conversation. And it really is the first part of becoming a confident trader ASAP. Take as many pictures as you can. Take pictures of everything that you see. Take pictures before you enter a trade. Take pictures during the trade. Take pictures after the trade. What was the result? And guys, don't just take a picture of your winner or loser. What did the market do 20 bars after your loser? What did the market do 20 bars after your winner? Because what happens is it begins to create this management tool as well. The next thing is to use your real-time performance spreadsheet, guys. And you're going to use this using that link that you just created to post in the room. Every time you take a picture, you're going to drop that link into the first page of your spreadsheet, guys. And this spreadsheet was given to you when you downloaded the software. I'm going to show you. Here is your trade tracking sheet. I'm going to give you the link. But if you go through in your search bar and you search in your files Nexgen 90 day, it's right there for you. But guys, I'm going to do one better. I'm going to drop my personal spreadsheet into the classroom for you. Steal it, because there's a lot of great information on it. But your first page is where you're going to create a trade journal. You're going to put today's date in there. We just took a trade, right? I annotated it. I dropped it in the room. I want today's date. What type of trade was it? Well, it was that high probability trend trade, the one that we're going to talk about in this first hour. How did I feel? Guys, I was confident because my rules were met, or I was nervous because I was unsure about what I was reading, and that's okay. That's my job, guys, is we're going to talk about what you're unsure about. I'm going to identify the conditions that were present when I took this trade. Did I have the advantages in place that I need to see in order to take this trade? I'm going to talk about my targets. Maybe it was one, right? My second target, it hit it as well. I won both targets. And under notes, guys, this is the most important part. I'm going to put, I followed my rules. This was an easy trade, or I broke my rules. This trade made me nervous. Only one target was hit because of this. And I'm going to take this picture, guys, and every day, every morning, let me pull up my picture for you. Guys, I know that this works because this is the same path that I took to get to where I am today. Every morning, I'm going to study the previous day's trades. Some of you posted pictures yesterday in this room. Did you go back and look at them this morning? Because what you're going to find is that if every day you look at those pictures from this spreadsheet, what worked for you and what didn't work, you're going to recognize patterns that are bringing you success. But more importantly, you're going to recognize patterns in yourself that are robbing you of success. Maybe it's trading into those termination conditions. Guys, is it just Ziba or is it everybody? Can you hear me? Give me a Y if you can. All right, cool. Just want to make sure. Hoorah, I like it, TJ. I know who my Marine is. So guys, Jerry, it's recording, but it won't be posted until after the classroom. John Novak likes to keep everybody in here rather than watching. That way, if you have a question, you can post it, but it will be posted up in after the class. Guys, you're going to find those patterns that are bringing you success, but the most important thing that this trade journal does for you is you're going to begin to recognize patterns in yourself. You're going to begin to recognize the things that you do. I'm going to tell you right now, and I'm not proud of it, but it is what it is. Guys, I traded into termination conditions for the first 3 months of my trading, and I traded into them hoping that areas would break. And what I found is that it was robbing me of success, right? So when I started using my spreadsheet, I started seeing that pattern in my annotations. And more importantly, when I started posting my pictures in the classroom, John Novak, who taught the classroom at the time, he was pointing out as well. He was recognizing these patterns in me, and he said, Mark, you got to fix this. Here's how you fix it. Here's a plan. Let's work together. Let's get you where you want to be. And I'm telling you guys, I don't trade in determination conditions anymore, and it's reduced my losers dramatically. So this little process of study each and every morning, it'll take you 5 minutes. It'll pay dividends. Most of you aren't doing it right now. Some of you are going to say, you know what, I'm going to try it, and you're going to come back to me at the end of next week, and you're like, oh my gosh, Mark, this little realization of what I'm doing is creating this eyes wide open scenario for me. Thank you for that. And I know that it works because I've been working it for years, guys. So don't be afraid to use the spreadsheet. And more importantly, the second page of the spreadsheet, this is every time your rules are met, every time you have those three advantages in place, take a picture of your trade, put it into the spreadsheet, create a study guide, right? I've got over 250 pictures of these high probability trend trades, of those 50-50 trades you guys are working on, and they're in the green section. And I just put my spreadsheet into the classroom for you one more time. So Ace J, steal my spreadsheet. Levon, steal my spreadsheet. If you sit down tonight, crack a beer, pour a glass of wine, grab a Diet Coke, whatever makes you happy, and go through each and every one of these pictures. Just click on a link and go, let's see. He had strong triggers. There's his entry. There's the money he made. Oh my gosh. And you're going to click through the next one, right? And you're going to say, whoa, this looks exactly the same. And you're going to go down and you're going to click another random one, right? And guys, I'm clicking 3 different people. I steal these from class. And you're going to be like, holy smokes, it's the exact same trade. What you're doing is you're burning these entries into your mind. You're focusing on these entries first, and that's going to be your key to success, guys, learning how to get into the market. And that's what our first 20 days is, following the rules to enter the market so that we can have the most manageable trades. My job with Nexgen is to teach you the looks, to teach you the rules, to create that recognition, and you're going to learn the trigger lines and the Fibonacci rules for when it's okay to trade, guys. You're going to be able to recognize within seconds when those advantages are in place and it's time for you to pull the trigger. And you're going to do that through simulation. You're going to get on that simulator. You're going to use that Monopoly money. And you're going to practice over and over and over and over. And guys, I'm going to type it in the room in all bolds again. It's okay to lose. It's okay to take mistakes. It's okay to not win every trade. Guys, you won't win every trade. Get accustomed to not winning every trade, because anything that wins 70 to 80% of the time, mathematically obligated to lose 20 to 30% of the time. If you take 100 trades, you're going to lose 20 to 30 of them. But the idea is that you're taking the right trades, and those right trades are going to win more than they lose, and you're going to make more than you lose, right? So you're creating this plan for success. Simulate it and make sure that you have the correct rules, because the correct rules have been proven to win more than they lose. That's got to be your focus. Don't practice the wrong trades. Don't go in there taking everything, right? Don't go in there fighting trends, fighting momentum, hoping to make your fake Monopoly money grow, because you can't do anything with it, guys. Monopoly money doesn't buy happiness. You gotta lose sometimes. It's okay. And the more you trust the methodology, the more okay you are with losing, because you know that another winner is right around the corner. We're going to simplify. We're going to take 2 trades this morning that we're going to talk about, but we're going to focus on the high probability trend trade first. What looks will you commit to? You've got to learn the looks so they become easy. Once again, guys, 250 versions of the looks to get you into the market. Study them. It's repetition creating recognition, guys, and I'm telling you that it works. People tell me all the time, in the first month it was like a different language. By the 3rd month it was fluent. By the 6th month, oh my gosh, I'm amazed at how fast I can read my charts. But you've got to keep it simple so that you're not overwhelming your brain, guys. And then after the class the next day, market replay. Who did market replay yesterday? PFI, were you able to get through? You were on my list of people to ask this morning. Able to set it up, go back, you can replay the day, guys. You can fix your mistakes, right? Pretty cool. You can take the trades that you skipped. You can skip the trades that you shouldn't have taken. You can work on your management plans. But the best thing about market replay, aside from it doubling your repetitions, right? Doubling your experience in one day, is market replay allows you to pause the market, to check your rules, to make sure that you're following your rules to the letter because your rules have been proven to win more than they lose. And what you can do is you can see the potential of this methodology when you're following the rules. Take pictures on market replay, show them to me, let me know what you're doing, let's talk about it. If you have problems, let's fix them. And guys, you're going to repeat this process every day until you're always taking the correct trades. Because if you're always taking the correct trades, what you're doing is you're always taking trades that have been proven to win more than they lose. You're guaranteeing yourself that you can win on simulator, right? And then you're going to make that switch. You're going to go over to one of those prop firms. You're going to go to like Apex or Elite or Top Step. And you're going to pay them a small fee every month, and they're going to give you a $50,000 account on simulator, and you're going to test your plan, right? Was it Mike Tyson that said everybody has a plan until they get punched in the jaw? Guys, every trader has a plan until they go live, and then the average trader abandons everything that brought them success because of the adrenaline, right? So that's what we're going to avoid. So I'm going to give you this, guys. This is your plan. It's been the same for 2 decades. Post your pictures, ask your questions, use your spreadsheet. And then Lady P, I would absolutely love to. We'll do it one more time. When you pull up capture software, we're going to capture an area. Guys, that was a good looking trend trade. And once we capture the area, it's going to give us that spot. And your Lady P, this is what I want you to do every time. I want you to draw arrows to your rules being met. The arrow tool is right up here. I want you to use shapes. Identify your entry points, right? Maybe identify areas likely to stop the market. And I want you to write your rules. And I want you to, guys, I'm going to reinforce this. Rule 1 is momentum. Yes, indeed, I had it. Rule number 2 is a clear path. Yes, right? Yes. Tell yourself, yes, absolutely, I had that rule. Guys, rule number 3, and I want you to type this out. In a downtrend, it says sell a pullback at an area inside of favorable large triggers. You're going to hate typing this out, but you're going to get good at it. But what it's going to do is, guys, it's reinforcing everything that you look for to take a trade. Momentum, a clear path, and an entry is your key to success in the beginning. This is your foundation. So you're going to copy it, Lady P, and when you copy it, you're going to paste it in the room, and you're going to wait, and we're going to have that conversation in the second hour about what you showed me. And I'm going to tell you guys right now that an awful lot of people are going to show me this trade in the room. There should be a flood of S&P winners, guys, because this look right here is absolutely everything that we talk about in the first hour. This is momentum, this is a clear path, and this is an entry area. And this particular trade made it, well, right now it made it 6.5 points to that key Fibonacci area. Congratulations. There's another one of those winners. A lot of you should be halfway to your goal today if you're following rules. We're going to talk about this, and we're going to talk about these rules because every rule that we look for was in place, and now we just have to go through the repetition process to identify them. So, without further ado, I'm doing a lot of talking today. Guys, I'm excited today. I hope you get excited with me. Rule number 1 for a high probability trend trade says that we have to have strong triggers, right? What are strong triggers? In an uptrend, when your background is green, guys, strong triggers. Lady P, do me a favor, take a picture, annotate it, post it in the room. Let me know that you're cool with it. If you're not, do not suffer silently. Guys, if you've never posted a picture in my room, take a picture, post it in the room, write test across it. Let me know that you're cool with it, right? In an uptrend, when your background is green on the large chart, strong triggers means that the small triggers, these solid lines, are crossed up. So, Levon, are you in the pop out? Control V. Control V will paste into the pop out. Otherwise, you just right click and paste. But you have to make sure that you clicked copy first. You have to put something on that clipboard. Let me know if that works for you. When you're in the pop-out version, there it is, Rockstar. Thanks, Levon. Nice job. Now I know that you can. In an uptrend, when your background is green, strong triggers means that these solid lines, the small triggers, are crossed up and above the large lines, these dash triggers. Guys, odds favorable momentum is something that you're going to learn to recognize in the first 5 minutes. When the smaller up, the larger up, it's the space created between the small and large triggers that lets me know that the odds are favorable for the market to continue in the direction of the trend. When we have this strong trigger look, it's the most favorable look for buying a pullback to Fibonacci support on a smaller, faster chart. Your large chart is going to look like just one bar, and that bar is going to have a tail or a wick, and this becomes important as you learn to study these looks. In a downtrend, the smalls are going to be below the large are going to be wide, they're angled in the direction of the trend. And once again, it's that space created between the two that lets me know that the odds are favorable for the market to continue down. When we have that odds favorable momentum, that key phrase that you're going to hear all the time, that is when it's most favorable for selling a pullback at Fibonacci resistance to continue with the trend. So guys, your first advantage is that momentum, and that momentum comes from strong triggers. Levon, in order to write in the box, let me take a picture real quick because you got the picture part down. Right up here you have these tools. So the same way that you click and drag, you're going to use that for the call out box. It's going to let you make it big or small. And then once you have it, you can see your little cursor thing is in there. And you can just vandalize that chart. Give me as much information as you're comfortable giving. I saw that you had the highlight one pretty good. You got the arrows down, so just the call out, you have to click and drag to create the text box. No worries. This is an education class, right? We're just learning. So no worries at all. Guys, odds favorable momentum, that's what we're looking at. Small triggers above the large triggers. Large triggers are wide. They're angled in the direction of the trend. There's some of those tails. There's those potential pullbacks. Guys, these are where you're going to be entering the market going with that momentum. Smalls below the large are wide. They're angled in the direction of the trend. That odds favorable momentum, again, there's some of those tails. This is your trade. This is your high probability trend trade. Commit to the advantage of momentum because when those small triggers return to the large, when they get inside of the large triggers, we call this a weakening of the large triggers. And when you weaken the large triggers, guys, anything can happen up or down. It creates a scenario where you no longer have the advantage of momentum. You forfeit that one thing that should get you started looking for a trade. So I'm going to ask the room real quick. Give me a Y in the room if you're with me. Strong triggers, separation of the small and large, angled wide in the direction of the trend. Guys, strong triggers cover mistakes. Trust me on this one. Strong triggers keep that market moving, even if it's to retest an area that may stop it. So we have momentum, we have strong triggers. We're committed to finding our momentum on the large chart. Now we're going to stay on the large chart and we're going to make sure that there's nothing in the way. We're going to make sure that there's no termination conditions, no areas that are likely to stop the market. And I'm going to go to the second section right here for the rules, tops and bottoms. And guys, termination conditions are just that. They're areas that may reverse the market. They're areas that may stop the market, create a bounce that's untradeable. These are the lines that the institutional traders are recognizing, that they're using to determine maybe targets, maybe profit taking, maybe entry points. And the areas that we're going to look for to be termination conditions, here's your key to the map, guys. Divergence highs and divergence lows. These magenta and cyan lines that print when there's a loss of momentum. So a pivot will happen. The market will go up and the market will come down. This magenta line or this divergence low, this cyan line, will print right about the third bar. It's at the third bar that we know that there was a loss of momentum in that market, guys. So it's not instantaneous. We're also going to look at red resistance, blue Fibonacci support, and yellow one-to-ones. And it's going to be a comparison of those areas and those same T3 trigger lines that provided you momentum. And it's a simple two-part process. Guys, keep the pictures coming. I love it. Second hour is when we're going to take a look at all your pictures and discuss them. Lady P, is this a tester for me? Beautiful. Nice job. Hey, look, there's a termination condition. We're going to talk about those right now. Two-part process. If price reaches an area, guys, these dynamic Rinko bars, these red bars coming down in a downtrend, if they come down, hey, good morning, PFI. Were you able to get market flow, or I'm sorry, market replay last night? Did it work out for you? Oh, man. Well, congratulations. Hopefully you just took a nap then. I remember those. That's awesome. 6 weeks. Oh my gosh. I've got like a 2,700 week newborn, so he's pretty good. He buys beers and like bourbon. That's amazing. I remember that. Man, it's the best exhaustion you'll ever have. Guys, dynamic Rinko bars come down and they reach Fibonacci support. When they reach Fibonacci support, all you have to do is ask yourself, where are the trigger lines? Guys, and if they remain above the area of support, well, then you're at a termination condition. You're at an area that may create a bounce, that may reverse the market, but you don't know right when it reaches. You don't know if it's going to reverse. You don't know if it's going to break. So this is your big waving red flag that says it's time for me to sit on my hands and do absolutely nothing and see how the market's going to react to this area. 1092 newborn, right on. Guys, when price reacts to the area, you're sitting on your hands, you're waiting. You've got this advantage of not trading into an area that may reverse the market, and you're waiting to see what happens. And one of two things are going to happen. It's either going to reverse, and you're going to end up with an uptrend and strong triggers in the other direction, or this area is going to break and the market's going to continue down. We don't have to guess, we just have to be patient. We know that this area is broken if both the small and the large triggers get to the other side. And PFI, if you have any challenges with it, let me know. And we'll go through it in class at the end of class one day. Tomorrow's the perfect day to do it on a Friday. So if you guys remind me, we'll go through market replay setup. We'll do it on 7 and 8 in the last 20 minutes of class. This area of support is considered broken when both the small and the large triggers get to the other side of the area, whether it is support or resistance. And what you'll find is that when an area breaks, when the trigger lines get to the other side, support begins to behave as resistance, and resistance will behave as support, guys. And you'll notice that when this area is broken, when that path is now clear, there was odds favorable momentum. And there's one of those tails right at Fibonacci resistance to carry you down to the next area. Guys, termination conditions are going to keep you safe from trading into areas that may reverse the market. In this picture, here's one of those divergence lines created. And guys, this divergence line isn't created until this bar up here. So price didn't reach this line. That's the first part of identifying a termination condition. But when price comes back and reaches this divergence low, and all of the trigger lines remain above, now we have a termination condition, guys. And if the market begins to trade back above the area, we have what's called a pivot stop out of a divergence line condition. A pivot stop out is a powerful termination condition, whether it happens at Fibonacci or whether it happens in the middle of nowhere. But it becomes even more powerful when it coincides with one of those Fibonacci lines. So here we get price reaches resistance, none of the triggers break through, no long trades, right? Whoops. I'm going to take a picture because I want you to see a little something. Patience is part of what we do. You guys are professional waiters now. Price reaches resistance and all of the trigger lines remain below. Guys, this is a termination condition. No more long trades. From resistance, price moves down to support. We're witnessing a fight between buyers and sellers. Price reaches support, absolutely no trigger lines break through. We're not going short, guys. 90% of what you do during the day is going to be reading your indicators and waiting for advantages. From support, price comes back to resistance, back to that divergence high, a second resistance, and look how all of your trigger lines tell the story. Your trigger lines say don't go long. This is an area that may reverse the market. Ultimately, guys, it does reverse the market. Large triggers go from green to red. Small triggers go red as well. You get that separation between the two, and there's one of those tails. There's one of those highest probability trend trades, one of those entries that typically wins 70 to 80% of the time. The hardest thing that you'll ever do is absolutely nothing when there's nothing to do. But when the conditions are right, when the rules are met, you're going to take this trade, guys, and this is going to be your bread and butter. This is what's going to take you to that next level as a day trader. So that pivot stop out of a divergence high, very powerful. Price reaches one-to-ones, no trigger lines break through. I want you to keep that process. Keep saying it in your head. Price reaches this area, where are my triggers? Price reaches one-to-ones, where are my triggers? My trigger lines remain above. Look at the bounce that it creates. Untradeable. No more short trades. When this termination condition creates that full reversal, absolutely. B, price reaches an area. Price reaches an area. The Renko bars are price. Renko bars reach the area where the trigger lines remain above. This is a termination condition. When this termination condition creates a full reversal, B, we call that a good bottom. We call this a strong bottom. When the termination creates a full reversal, it's a strong bottom. When a termination condition creates a full reversal, it's a strong top. But in order for it to be a strong top or bottom, it first must be a termination condition. Guys, when this termination creates the full reversal, it's a strong bottom. When that strong bottom gives me odds favorable momentum and a clear path, guys, this is your highest probability trend trade. There's that tail once again. This is your money, guys. This is your 70 to 80% winner. This is your foundation. The one thing, this entry, that you should be focusing on. B, here's a great example to answer the question. Right here, price doesn't reach an area, right? It seems to turn from the middle of nowhere. No, Levon, definitely not. And when we talk about entries, I'm going to show you how you can pinpoint where the bottom of this tail is most likely to happen. Because if you wait for the tail, that market's gone, already gone. It'll make sense the second we go through the entries. So stick with me here. I have one more termination condition that I want to talk about. So here price reverses, right? We can all see it. It goes from red to green. It goes from down to up, but it's not a termination condition. It's simply a pivot in the middle of nowhere. Here we had odds favorable momentum, but we didn't reach the area, but the market turns again. So B, not a strong bottom, simply a reversal. Not a strong top, simply a reversal. On a larger, slower chart, there you go. Let's call it a weak top. On that large chart, you're not going to see change happening, guys. You're not going to see it in one bar. So the only termination condition that I respect on a smaller, faster chart, the only termination condition that I'm looking for on a smaller, faster chart is 3 divergences in the same price range, 3 losses of momentum in the same price range. PFA, I got you just as soon as I finish this little snippet. So when I get 3 visual divergences, these cyan lines print from pivots, I know that I've lost momentum 3 times, right? So 3 losses of momentum may terminate the trend. It becomes even more powerful when my small triggers work their way inside of the large triggers. Remember that anything can happen trigger look, guys. We're visually seeing on a smaller chart that the trend may be ending, that there may be a push in the other direction. It becomes even more powerful still when my final pivot is higher than the previous from a low or lower than the previous from a high. And you're going to see these three divergences, this at a low or this at a high, when your large chart is changing direction without the benefit of an area. So this is the only termination condition on a small chart that you're going to look for. You're not going to get caught up on one line on a small chart. You're not going to get caught up on one divergence on a small chart. You're simply going to say, if my small chart has three divergences, once again, I'm going to sit on my hands and I'm going to wait and see what happens. And then PFI, does the clear path count after it passes the fib level? Absolutely. So PFI, right now, do you recognize it's a termination condition, right? Price reaches Fibonacci resistance, all of your trigger lines remain below, therefore, it's a termination condition. When is it not a termination condition anymore? When both the small and the large triggers get to the other side of that resistance. Absolutely, the large chart. This looks very much like your picture now, right? Price reaches, no triggers, no clear path, rule number 2 is not met. So you're going to sit on your hands and you're going to wait a second. Is it going to break? And if it breaks, both the small and the large triggers will get to the other side of that area of resistance. It will begin to behave as support. And here you can see, with odds favorable and that clear path, there's another one of those tails. Did we just have an aha moment? I love it. So let's go look at crude right now, right? Let's take a gander at the live market. Let me get over to crude oil real quick. So here's crude oil right now. There is resistance. My trigger lines are still below it, aren't they? So PFI, the average trader, is saying, man, I'm going to wait for this area to break. I'm going to wait for the trigger lines to pass, right? That's half of it. But what can Fibonacci resistance do? It can also reverse the market. We don't know whether it's going to reverse the market or whether it's going to break right now. So guys, I want you to take both of your hands and I want you to put them right under your butt. We're sitting on our hands and we're waiting. Jay Solar, do I have a termination condition at the bottom? Do I have price reached an area and no trigger lines break? I don't, do I? No. So I can't have a strong bottom. Because in order to have a strong bottom, I have to have a termination condition that creates a full reversal. What I have is a pivot that turned the market. That's it. That's all it is. Right there at 931, but Jay Solar, check it out. 1, 2, 3 divergences in the same price range gave me a push right up to Fibonacci resistance. Just a weak bottom. Don't even worry about saying weak bottom, Levon. If it's not a strong bottom, it's just a pivot. How many divergences does it take to create a termination condition? See, so Jay Solar, what you're doing is you're adding rules, right? So your rules say it could be 2. My rules say price reaches an area on my large chart. That's not a pivot stop out, is it? That's only 2 divergences. So let's go back to pivot stop out. Jay Solar, if this push down exceeded that divergence low and then reversed with the trigger lines above, then I have a pivot stop out. Then I have a termination condition. Then this full reversal is coming from a termination condition, right? Then I have a strong bottom. Does that make sense? Right now I have 2 divergences. That's it. That's all. 2 losses of momentum. I don't have 3 losses of momentum. I'm not coming from an area. So it's not a termination yet, guys. It's just a pivot. All my trigger lines. Then Jay Solar, this is a fantastic opportunity for clarity. A higher divergence doesn't mean that it's a strong bottom. A higher divergence isn't even a termination condition. Because what's the recipe for a termination condition, guys? I can't stress this enough. In order to have a termination condition, Price reaches an area, triggers don't break. Don't deviate from the plan. Don't create scenarios. I want to take a long trade so badly that I'm going to change my rules to create an advantage, right? Does that make sense? Embrace simplicity. So J Solar, 3 divergences on a large chart all day long. Otherwise, let's use price reaches an area, trigger lines remain below, and look how it reacts. Price reaches an area, trigger lines remain above, look how it reacts. Straight from the area, straight up. No, it's a pattern that John Novak talks about. That when you see it on the large chart, if everything else agrees. So J Solar, if I had a termination condition and then I get a second higher divergence, it kind of validates that termination condition. Does that make sense? So if this is a termination condition and then I get a second higher divergence, I love that look, but it's not a termination condition. Is that clear it up? I think it took me 3 minutes to get to that I should have said in the very beginning. And I think we had an example back here as well. Let me look real quick. And guys, these are great lessons. Weak triggers, add a fib, divergence prints, market reverses, and then I get that second higher divergence, and none of the triggers are breaking through. Man, that's a great indication that I'm probably going to try and push up a little bit more. But that's our termination condition. Price reaches an area, triggers don't break. Price reaches an area, triggers don't break. Guys, you're going to try to create scenarios in your head. My brain does it all the time. Embrace that simple recipe. Guys, we know that we're not going long yet because the trigger lines remain below. Great question, PFI. J Solar, great examples in there of talking about it. So guys, I'm going to go to my pictures again and I'm going to share some great stuff with you. I'm going to give you a picture for your spreadsheet. Termination conditions at a high. News at 10, Debbie, thank you. And I want you to notice that I wrote the rules for determining a termination condition on here. Price reaches an area, triggers remain below at a high. This is a pivot, right? Guys, this line didn't form until the third bar. Price didn't reach the area, but it did create divergence. When price comes back and reaches that divergence high, now it's a termination condition because my trigger lines remain below. Same at resistance, same at one-to-ones. Guys, this is your termination conditions at a high. So the low is just the opposite. Price comes down to the one-to-ones, the trigger lines remain above. I'm not going short. Price reaches support, does the same thing. There's one of those pivots, but when price reaches the pivot, it's now a termination condition. So guys, I'm going to ask you, we have our recipe for termination conditions, right? We know that if price reaches the area and no triggers break, we're not doing anything. We're sitting on our hands and we're waiting. If small and large break the area, we know we now have that clear path again, right? And it's off to the races, looking for that odds favorable momentum. And now we're going to take it and we're going to start looking for an entry because we have those first two advantages in place. Levon, this is where your mind gets blown. This is where we figure out how to use those tails, or how we get to pinpoint where those tails are likely to happen. So we're going to go to rule number 3, guys. Remember that our large charts, give me just a second. Our large chart gave us the advantage of momentum with strong triggers. Our large charts, Rakesh, I love that. I love that. What a great thing to do. Our large chart gave us a clear path. Guys, give me a Y in the room if you're with me so far in the lesson. Identifying momentum in the form of strong triggers. Identifying a termination condition by using that simple comparison. Price reaches an area And if the triggers don't break, we're just going to sit on our hands because we give away that advantage of a clear path. Once those are in place, let's figure out how to make money with those advantages, guys. Let's look for our entry area. And our entry area, our entry rules, I wrote it earlier. I'm going to say it again. We're going to use a limit order to buy or sell. If we're in an uptrend, we're going to use a limit order to buy. If we're in a downtrend, we're going to use a limit order to sell. And we are going to buy or sell at an area inside of favorable large triggers. We are going to buy or sell a pullback, meaning that the market is going to retrace against that overall trend. Remember, the large chart defines momentum. The large chart defines the trend. The large chart defines the areas. When the large crowd opinion has been established and verified through our rules, we're going to let these yahoos fight. These silly people that want to fight trend, these silly people that want to fight momentum, these silly people that don't have the advantage of Nexgen, they're going to give us a little push, a small retracement right back to the perfect area, guys. And they're going to do that. Let me give you this picture. I like this picture. John Novak created it. They're going to do that on the smaller, faster chart. And this is going to be the look when you have odds favorable momentum, when there's nothing in the way, guys. We're in an uptrend. Your small chart is going to have strong triggers. Small's outside of the large are wide, they're angled in the direction of the trend. And we're going to make sure that we have favorable large triggers, guys. And I'm going to show you the picture of what that means. Favorable large triggers are when your large and your synthetic triggers, both sets of those large triggers on your small chart, they're wide, they're angled in the direction of the trend. They're one on top of the other because this is going to create your smallest window of opportunity. This is what's going to give you the least amount of risk. This is what's going to give you the smallest point where the market is likely to continue. And you're going to create that window of opportunity when your small chart gives you a reversal bar. This signals the beginning of the pullback. On your small chart, your window of opportunity for a long trade is from the highest point of support to the lowest point of support inside of favorable large triggers. When I say support, I mean fibs, I mean midband, or I mean yellow 1-to-1s. For a short, it's still fibs, midbands, or 1-to-1s. And what happens is that we're using these lines inside of favorable large triggers because it creates the point where the market is likely to continue. When the reversal bar prints, you're going to use your drawing tool. And you're going to draw a box from your highest point of support to the lowest point of support. And this is where the market is likely to continue. And you're going to right-click on your chart. And you're going to activate a limit order. And you are going to sit on your hands once again. And you're going to wait. Either the market retraces that small push down against everything saying up. And it's going to retrace, hopefully, to a limit order right there at the top of the window. And you're going to be in a trade. If it does, you're going to have the advantage of momentum. You're going to have the advantage of a clear path. And now you have the advantage of having an entry where the market is most likely to continue. And guys, this is your high probability trend trade. As the market retraces, this is our entry right at the top, right at the collision at the top of the window. But because we've created a window, I want you to mentally be ready that this trade may go a little bit further against you. It may push down a little bit, and I don't want you to panic because you still have every advantage in place. Anything that wins 70% of the time is mathematically obligated to lose 30% of the time, right? 100 trades, 20 of these probably aren't going to work out the way you wish they would have. But Nexgen users, we manage our risk before we ever manage our profits. We manage our risk through taking the best entry on the retracement at the area inside of favorable large triggers. And we're going to manage our risk by putting a stop beyond that window of opportunity. If the market decides to continue through that window and we lose that advantage of an entry area, we're simply going to exit the market. We're going to take a small loser, we're going to dust off, and we're going to wait for that next best opportunity. But guys, when I take this entry with those advantages in place, this is a trade that I refuse to miss. This is a trade that I've studied, that I've taken 1,000 pictures of, that I've simulated 100 and 100 and 100 times. 70 to 80% of the time, this is the outcome, guys, from the most simple trade that I teach, from the most basic of advantages, momentum, clear path, in an entry area, 70 to 80% of the time, it's profit target reached. Once it begins to move in the direction of the trade, once I get that reversal bar the other direction, I've reduced my risk to below that reversal bar, right? Because that's the whole goal. Manage your risk, and then you'll be able to manage your profits. So guys, this is your high probability trend trade. Lady P, you want a copy of the entry? I'm not sure exactly which entry you're looking for, but how about if we do this? You guys remember on the S&P when we were looking at it earlier? Levon, this is how we use those tails. Lady P, which entry are you looking for? Just any entry in general? No worries. We're going to do it right now, and we're going to do it together. I'm going to get rid of your cheater here. No circles for you guys. Are you ready? Let's do this together, guys. Two charts. Ace J, play along. Paul, Levon, Lady P. Guys, play along with me. Trust me. This is a great way to study. The first thing we do is we decide what's the trend on the large chart. Background's red, we're in a downtrend. Background's green, we're in an uptrend. Guys, we're using one bar, the most current bar. What direction is this market moving? Give me a U or a D. It's going down, right? Everybody, that's easy. So the next thing that we ask ourselves, guys, every trade that I take, I talk through this in my head. Actually, I say it out loud. Do I have odds favorable momentum? Do I have smalls below the large? Is there space between the two? Is the market moving in the direction of the trend with momentum that is advantageous? Absolutely, right? I have the advantage of momentum. Now I have to ask myself, and guys, this is the one that's going to confuse new people a little bit. Has price reached an area? Here's the bottom of the bar at 45.1250. Here's a divergence low a few ticks off in the distance. Can we say price has not reached an area? Jay Solar, when this one's set up, I had to go to the most current bar. It's not a 50-50. The large triggers had cleared. Does everyone see how that Renko bar has not touched the line? It hasn't gotten to that line yet. So when that happens, absolutely. So when that happens, guys, I want you to do this. If price doesn't reach the area, it's not a termination condition. Ooh, that's really small. Guys, this becomes a target. If price hasn't reached the area yet, man, this is a target. This is not a termination. Let me give you that. And that's why I say price reaches an area 1,000 times when I talk about, whoa, there we go. When I talk about these lines, this is a target. And you're saying to yourself, but Mark, there's 2 ticks to that target, right? Yeah, that is. There's 2 ticks to that target. How can I make any money? Well, guys, you remember that we're going to sell a pullback at an area inside of favorable large triggers, which means that we're going to grow that area quite a bit. So when the rules are met on my large chart, everybody agrees with me, yes, the rules are met on the large chart. I have a downtrend, I have strong triggers, and I haven't reached an area. I focus my attention to my smaller, faster chart. My large triggers are down, my synthetics are flat, and this market's going to start pushing, right? It's going down with the momentum. It's going down with the direction. It's going down with strong triggers. My large and my small are beginning to come together, one on top of the other. Does anybody remember Lady P, Jay, Levon? What are we waiting for? PFI? What do we need to see on a smaller, faster chart? What signals the beginning of that pullback? Anybody? A reversal bar. Absolutely. We don't have it yet. Guys, I reached yellow one-to-ones. Is this a termination condition? This is the best example ever. No. Why not, Jay Solar? Because we look for our areas on the large chart. There's only one termination condition that I'm giving any credit on the smaller, faster chart, and it's 3 divergences in the same location. Guys, I am hoping that this one-to-one creates a bounce to my area inside of favorable large triggers. As the market continues down, I'm looking at Fibonacci resistance. I'm looking at a mid-band. I'm looking at triggers coming down, but I'm still waiting for a reversal bar. I'm not jumping into this market hoping that it continues, right? There it is. I'm going to ask again, guys, am I scared of divergence on my small chart? Am I worried about one divergence? Or is this loss of momentum exactly what I need when I recognize my areas inside of favorable large triggers? The reversal bar prints, and I'm going to grab my rectangle, and I'm going to go from the top of my triggers to the bottom of my triggers, guys. This is where I'm looking for areas. But let's refine it. Let's get it even smaller. Let's go from my highest point of resistance, which is Fibonacci resistance, to my lowest point of resistance, which is this midband. Do you see it? This is my window of opportunity, guys. This is the area where the market is most likely to continue. Your job as a rules-based trader, Levon, you're about to see why we don't trade tails. Whoops, that's vertical. You're about to see why we don't trade tails, why we trade areas. I will. Let me do this entry real quick, PFI, and then I got you. Is it just a trade that you need feedback on, or is it revolving around entries? Cool. Guys, my limit order is just below that area of resistance inside of favorable large triggers. Give me a Y in the room if you're with me. We got the advantages on the large chart, right? No worries. So we waited for the reversal bar. We identified the areas inside of favorable large triggers, and we activated a limit order, a tick or two below that lowest point of resistance. And now it's out of our hands. The market's coming up. Notice how the midband comes down, guys. One of the things I do is I'll drop down a couple ticks to remain below that midband that's moving down. And the market comes up, and guys, you're now in a trade. You are in a short position at 45.17. You have the advantage of momentum, you have the advantage of a clear path, and you have the advantage of an entry where the market is most likely to continue. My stop is going to go a few ticks above that window of opportunity outside of those large triggers. And in this particular trade, I only have 8 ticks risk, guys. I have 1 point risk. And there's nothing for me to do at this point. I'm either going to get stopped out, it's one of those costs of doing business, or I get a reversal bar in the direction of the trade. And when I do, I'm going to reduce my risk to 2 ticks above that reversal bar. So now my stop is at 1775. Guys, I have 3 ticks of risk on a high probability trend trade. And that trade goes from 17 all the way down to 1050. And if I look at my large chart, do you know what corresponded with 1050? Fibonacci support. I was able to gauge where the market is likely to go based on momentum. And guys, that's my profit target, that giant blue line that says that, Mark, this is a termination condition in the moment. I know where it may stop. And if you got in at 17 and you got out at 1050, guys, that is 6.5 points. That's 300 and change on your contracts. Guys, this is your highest probability trend trade. This is the one. How do you study it to build confidence? Levon, if you go back on your large chart and you see odds favorable and you have no terminations and you circle this tail, if it corresponds with an area of resistance inside of favorable large triggers, guys, you have a high probability trend trade. Your job is to study this. Your job is to go back to take this picture, right? I'll use my Snagit. And the most important thing that you can do is draw an arrow to those trigger lines. And guys, you can annotate odds favorable momentum. Whoop. And then right here, you can write in there, no term, right? Rules 1 and 2 met. And guys, for you new users, this is the most important thing that you can spell out completely. Pull back to an area inside of favorable large triggers. You've defined your rules. You've taken arrows to show exactly what they are and where they are. And what you've done is you've given yourself this highest probability trend trade look. Upload it to Screencast. And if you're going back and you're circling and studying, guys, drop your picture. It doesn't have to be a live trade. Put it in the room. We'll talk about your entry. But then go to your spreadsheet. Go to your favorite looks. Go to the ones that give you all of your rules met. Drop it into that chart. Create a hyperlink and call it Perfect ES Short. Now you can come back and you can study this every time to determine what it should look like when you're entering the market. Does that make sense, guys? This is your foundation. I spend so much time on this trade because it's imperative that you understand the basics so that you can be successful with the next step. So PFI, strong triggers, smalls above the large, not quite, right? Not a termination condition, PFI. Because what are we looking for? We're looking for Fibonacci resistance, Fibonacci support. We're looking for yellow 1-to-1s, or we're looking for the divergence lines. I'm going to take a quick picture right here. Whoops. At the time of your trade, I want you to see this. If I draw a line through the fib, do you see how at the time of your entry, both the small and the large, neither had broken through? They were coming close, right? But they hadn't quite cleared that area. I'm not saying that this isn't a great trade, but what I am saying is that you did trade into an area that hadn't broken yet. It's a beautiful trade. Everything is up. Everything is strong. All of your triggers agree. 1, 2, 3 divergences. And you took a momentum style trade against 3 divergences. Yeah, absolutely. So PFI, when I look at charts, I want you guys, I want to explain this to you. I look for potential pitfalls. I look for things that have less chance of winning or more chance of losing than they do winning. Trading into areas with no trigger lines through creates the disadvantage of a clear path, right? Or you don't have the advantage of a clear path. Trading against 3 divergences can be problematic. Does that make sense, PFI? But here's the flip side of it. Is everything says up. Every trigger is up. The smalls are breaking above the large. Every trigger line on your small chart is up. There's a tremendous amount of advantages. And what you've done is you've taken a trade that has more advantages than disadvantages. And guys, this is where you're going to end up. And the cool thing is, PFI, is if you didn't take this one and you let everything break, there's one of those tails. There's one of those pullbacks. There's a lot of divergences going on a small chart here. And this is crude oil, and it's happening because you're trading directly into news. At 10 a.m., there was a news release. That's okay. But the advantages are there. The entry is perfect, right? But if you give it just a second for that area to clear and be sure, there's your next opportunity, and it goes straight to Fibonacci resistance. I love everything about this trade. It's not high probability because we didn't have the advantage of a clear path, but it is medium probability, which means that you have to manage it assertively. And this one never gave you an opportunity for management. This one, with the momentum, goes straight to that next Fibonacci area, and it actually reaches the second one. As long as you focus on the process. Guys, rich is a result of the process, right? A great golf game is a focus of the process. Don't worry about the money. The money will come when the process is met. Guys, that's our first hour, and it always carries over, especially when I have you awesome new users in here. But it's important to me that you understand. Focus on the best, right? Focus on the absolute best. And what's going to happen is that absolute best is going to get you where you want to be. That absolute best is going to give you the highest advantage trade. It's going to give you the highest probability trade. And from that highest probability trade, your education, your study, your repetition is going to grow. You're going to begin to take trades like PFI just showed. You're going to begin to take medium probability trades. You're going to learn to manage your trades more assertively. You're going to be able to get winners out of losers because of your ability to read your charts. But you have to focus on the basic first, guys, and I'm going to give you the tools that you need. We've talked about the looks. We've discussed the conditions. And guys, this is a high probability trend trade checklist. This should be your first 20 days with Nexgen. Whoops. Learning how to recognize these advantages, going through, studying them, presenting them in class, and understanding the rules that create an advantage. This is a checklist that I think you should print out. I think you should have it on your desktop, and I think you should police the hell out of yourself. And I think that these are how I'm going to police you. You should be writing these rules on your chart. You're going to present trades, and I'm going to give you feedback. And this is how you're going to know if you've done something right or whether you've done something wrong. Guys, the feedback is imperative to getting you where you want to be. For those of you that need a visual, here's the exact same checklist. Guys, I'm dropping these in the room. Here's the exact same checklist with pictures liberated. Guys, did everybody lose audio or just Levon? Can you hear me? Give me a Y if you can hear me, please. Okay. There we go. Here's that exact same checklist with pictures. What is a good top or bottom? It's a termination that creates a full reversal. What do strong triggers look like, right? What do weak triggers look like? Is the area broken or is it not broken? And how do I determine that window of opportunity? Guys, this is your cheat sheet. This is everything that you need to know to get in to understand the software, to read your charts. This is your plan for simplicity to get you the results that you told us that you wanted to get. And then I'm going to give you one more thing, guys, and this is the most ignored tool ever. This is a simple plan for consistency. I want you to ask yourself, I want you to write it down on a piece of paper in front of you. My goal is to win more than I lose. My goal is to make money. My goal is to have financial independence. My goal is to quit that damn job, to sit in my underwear and make money every morning so I can be on the golf course by 10 a.m. before it gets hot. You're not going to do that by wishing in one hand, guys. You're going to do that through consistency. You're going to do that through having a plan. Good job, Paul. Yeah, it's 7 a.m. here too. I don't teach in my underwear though. That's just weird. Guys, you have to have a plan. You have to have a plan of attack. You have to know what you're going to do in any situation. So I want you to define your entries first. Great entries create manageable trades. Great entries give you the opportunity to reduce risk. Great entries are what manages risk first, guys. Define your entry and be insistent that the rules are met. Because when you take that great entry, your risk is reduced, guys. But you're going to have to get to a point to where you manage those amazing entries. If day trading, not yet, Ziba, I haven't made it yet. We're still going over the basic plan, but I promise I'll get you. Once you define your entries, once you practice your entries, once you've presented me 20 pictures of your best of the best entries and you know you're getting in at the right spot, let's do something with it. We've already managed our risk. Let's begin to manage our profits, guys. And it all starts with the perfect entry, getting in at the area inside of favorable large triggers, and your initial stop goes outside of the window of opportunity. At this point in the trade, there's nothing for you to do. You're either going to get stopped out, normal part of a positive equity curve. Losers are going to happen. I don't want you to associate losers with the negative connotation. I want you to associate breaking your rules with a negative connotation. The stop's in place. The entry is perfect. The advantages are in place. There's nothing for me to do except either get stopped out or the market gives me a reversal bar. And when it gives me that reversal bar 70 to 80% of the time, I'm going to reduce my risk 2 ticks above that reversal bar. If it's a long trade, 2 ticks below that reversal bar. I'm managing my risk first. And at this point, there's nothing to do. I either get stopped out for a smaller loss or it goes to my first target. Guys, in this mechanical, methodical plan, your first target is $100. And if you reach $100, that's in the bank. That's yours. They can't take that from you. That's in the account. You now have money in the bank. You're going to move your stop to break even, and you're going to slide your hands underneath your seat. You're going to roll your chair 6 feet back. It's a small swing 1-to-1, PFI. Where do you see it? Show me a picture. Post a picture of what you're looking at, draw an arrow to it. Let me make sure, because right now I'm guessing. Oh, then give me a second. When I'm done with this, I'll scroll back to your pick. Guys, you're break even. There's money in the bank. The dopamine's flowing. You have confidence through the memory of success, right? That's a $100 trade. But you still have one contract sitting at $200. And it's either going to hit that one and you've got the confidence to hold because you're already being paid, or you're going to get stopped out break even, which really doesn't sting. But if it makes that second contract, guys, you just took a $300 trade, a high probability trend trade, an every advantage trade, a foundational trade. And that $300 to the average person in this room is like, whatever, I spend $300 on dinner, right? But $300 a day, one successful trade, is a $1,500 week. Guys, it's a $6,000 month. It's a $72,000 year on that small little winner, that $300 winner. But the reality is there's going to be 4 to 5 opportunities a day, right? And if I take 4 winners, it's $1,200, but that's not likely because I'm going to lose 20 to 30%. So now I lose one, that 300 goes away and goes to 900, but then the loser from the trade, I'm at 700, right? Guys, what if 2 of those only make the first target? The third one makes the full, and you're sitting at $500 at the end of the day. It's a $2,500 week, right? That's a $10,000 month. That's $122,000, $120,000 a year from being conservative. And I want you to embrace that the process yields the results, guys, that you don't have to take more trades. You don't have to chase every trade. You don't have to be in every move of the market. Be in the best moves and compound through contracts. That's how the successful traders are doing it, guys. The successful traders that I know, every one of their trades looks exactly the same. Every one of their trades follows a plan. Every one of their entries looks exactly like their entry yesterday and exactly like their entry is going to look tomorrow. And their management is nothing more than if-then. If this happens, then I do this. It has nothing to do with their gut, their emotions. It has nothing to do with their fears and their hopes. Pragmatic approaches to entering and exiting the market is your path to success. Are there any questions about the high probability trend trade? Guys, I know I drug it out an hour and a half. I said it was going to be 30 to 40 minutes, but you guys had amazing questions. Got some great feedback. We got to do a bar by bar. Does anybody have a question? Pretty good, in a good spot. News in a minute, did I hear? So let's see how the ES reacts to the news, right? I'm going to take a break. I'm going to stretch my feet for 5 minutes, guys. Do me a favor, post a question, post a picture. When I come back, I'm going to scroll to the top of the room and we're going to start looking through your pictures. We're going to start looking through your trades. And I'm going to remind you right now, if you don't have rules written on your trades and it's not a high probability trend trade, guys, you're making my life difficult on helping you. PFI, what are you looking at? Pink lines right here, pink dots. That's what's called PFI. This is a small swing one-to-one. Yellow one-to-ones. And guys, remember, I'm not a tech guy. I'm a chart reading guy, but I'm going to show you where to find the information and how I use them. PFI, the yellow one-to-ones are 100% Fibonacci alternates, right? So from A to B happens, your market takes the large swing. And then when the large swing creates, nope, don't get ahead of me. From A to B, you're good, and then B to C, your software reads these large swings, right? And it projects the same distance from A to B, and that's how we get these yellow one-to-ones. These yellow one-to-ones can be termination conditions. When we go to the picture that we talked about, when we talked about the areas that I'm respecting as termination conditions, yellow one-to-ones fit the bill. Pink one-to-ones do not, because pink one-to-ones, they're small swing one-to-ones. These are smaller, faster, tiny little move one-to-ones. These are the moves within the moves, PFI. And what you may find with these small one-to-ones, I don't even have them on my NinjaTrader 7, is maybe it's a place for a bounce. You see them on NinjaTrader 8. The only market that I've ever recognized that really bounces off of these is the NASDAQ. Small swings may create a bounce point. The way I use them, PFI, is I ignore them on my large chart for the most part. I ignore them on my small chart. But if they line up right at one of my entry areas, well, then I kind of dig it. It's just a little tiny thing that helps out. I personally never use the small swing one-to-ones. They weren't even a part of the software for a long time. They were available but never used. So it may be a bounce point, but it's not necessarily a termination condition. Where did it make? Are you saying right here it made price bounce twice? Is that where you're looking? You want to see something kind of cool? I love a good gyration. Let me show you something. Here, price reached Fibonacci resistance and no trigger lines broke through. There's a good chance that that's what made it bounce. Here, it still didn't break through Fibonacci resistance, right? And there's another bounce. Well, there's your pink dots right there, not corresponding with any Fibonacci areas, and it railed right through, didn't it? Kind of cool. Guys, when I talk about simplicity, there's a reason that we never discuss these pink dots in the first hour. Does that make sense, PFI? Both gyrations after, are you talking about this and this? That's divergence. Those aren't the pink dots, right? Are you talking about at this area right here? Okay. It was also trading right into news. So there was a lot of speculation going on. But PFI, go back and see how many times. Remind yourself, yeah, watch out for news. You had momentum, you had a clear path, everything set up when it reached these purple one-to-ones. Your small chart showed the fluctuations in the area, but the rules were met, the entry was perfect, the results were outstanding, right? I know, get excited. I'm excited to trade every day. But remember that the large chart is very exact, right? Fibs, yellow one-to-ones, divergence highs, divergence lows. You could turn those off and never miss them. On the large chart, Jay Solar, yeah, he broke the three divergence rule, didn't he? Absolutely. We talked about that when we talked about his trade. No, screwed up sounds bad. You're new and you're learning, right? And it worked out. The problem with this PFI is that this time it worked, right? So how many times is it not going to work? And I've been destroyed on three divergences more than I win, but the problem is the market's going to let you get lucky every now and then. And then as soon as you go to live money, those three divergences are going to reverse a market on you. So patterns, guys, and Jay Solar, remember that patterns are based on a sample, a large amount, 100 times with three divergences in the same area. I would say maybe 60 are going to reverse the market. Maybe 70 are going to reverse the market, at least big enough to take out a loser or to give you a loser. But 20 to 30% of the time, you're going to get lucky and you're going to be able to trade through it. But you don't know which it's going to be. Are you willing to gamble? It's just pattern recognition. But that's great. Yeah, and that's what you have to tell yourself is luck is a horrible path. Luck is a difficult thing to recreate, guys. I'm going to take a few minutes. I'm going to stretch my legs. I'm going to breathe. I'm going to rotate my hips, all those things that you have to do to limber up. And then when I come back, guys, we're going to start looking at pictures. I'm going to go through pictures. If you have questions about your pictures, make sure you post it on the chart. Otherwise, because of how long this first hour took, and I want us to be able to see the live market a little bit too, right? Look at that. Price reaches, resistance, no trigger lines through. It'll be fun to see what happens. I'll be back in 5, guys. All right, guys, I'm back. And Abdulaziz, I want you to shout that from the mountaintops. It's better to miss a trade than to win breaking the rules. It's a bad habit to correct, and it's hard to correct this habit. Guys, it is so true. Practicing the wrong trades is one of the worst things you can do. You're creating muscle memory to do it wrong. I'm glad you posted that. All right, guys, so here's what we're going to do. And I just want you to see this so you don't think I'm ignoring you or waiting, is I have to literally scroll all the way to the top to get to your charts, which means that in order to see your comment, I have to scroll all the way to the bottom. So guys, I'm going to go through and I'm going to start looking at these charts. And the reason I do it in this order, the reason we spend so much time going through the rules is because without that great foundation, without understanding what it is that you're looking for, it's not going to make any sense, right? It's not going to make any sense at all what the heck I'm talking about when we look at your charts. So I'm going to go through scrolling up to the top, and I know Gary got us going today. He posted a lot of great stuff this morning. Almost there. Here we go. So guys, I'm going to go through, I'm going to look at a few pictures, then I'll scroll to the bottom and make sure I didn't miss a question. If you have a question, it doesn't have to be your chart. Um, Make sure that you ask it. Guys, this is absolutely beautiful. Notice that Gary uses a checklist. Everything says up. Two divergences don't scare him. Beautiful entry right at the areas, right inside of favorable large triggers. And he rides this one all the way up to Fibonacci resistance. There's nothing to say about this. This is absolutely beautiful. Fantastic trading. There's the same one going up, and he says, well, I reached termination conditions, therefore there is no trade for me. Taking a picture of his rules not met, reinforcing those rules, right? Gary, I like this picture. I want to talk about it though. So the rules, and Gary, I don't know if you're in here. Hopefully you still are. I took a picture of this picture this morning when you did it, so this way I don't have to scroll even. Guys, a lot of you were trying to catch that momentum trade. John Novak talked a lot about it. The rule for the momentum trade, guys, is you have to wait for a down bar on your large chart. The termination condition is perfect on this one, but you're waiting for a down bar, and that's exactly what got you. You got in, and it kicked your ass because there wasn't a down bar yet. You broke your rules a little bit as you're learning these new ones. I noticed you did it on Sim, which is perfect, practicing rules, practicing to get the right trades. And then, Gary, great recovery when it comes back up to resistance, right? Everything comes back down, probably an HVA or something right there to get you in. Just a little premature on the jump. And then also, this is an HVA trade, guys. This is a termination. The triggers roll. Beautiful entry. And then the only thing is that it's trading directly into Fibonacci support. It's trading directly into another fib with all of the areas right there and all the triggers above. But your entry is spot on. It's right at the HVA line, and you manage it aggressively. But you've got to respect those fibs. The same way we use them to get into trades, guys, is you've got to recognize them and respect them. The market says up, the triggers are flat. Gary, I have absolutely no idea. This HVA line means absolutely nothing if your rules aren't met. I can't reiterate enough, guys. You guys adding these range charts, it's going to get you into trades that make zero sense. You have support, divergence from support, reversals from support, HVA lines from support. You've got triggers up, trend up, and you went short hoping that it magically retraces back to that area, and it did. And it's teaching you to break your rules. But then you use that termination condition, the triggers roll, and now you have an HVA entry after the termination condition and the triggers start to roll. I like that. That's a nice recovery, but the short on the way down is aggressive and it's going to lose more than it wins for sure. And then once again, you said that you broke your rules, out break even, but Gary, once again, that's a perfect HVA. There's no reason not to take that trade. And then one more from Gary. 50-50 trade from a good top. You're just waiting. What a beautiful pre-trade picture. And then there's that 50-50. There's your entry. And you end up making some money and then managing out of your second contract. Great job, Gary. Great start to the day, guys. I'm going to scroll to the bottom now. Ziva, it's right in the rules. Yeah, Jay Solar, I'll go through and we'll grab yours real quick. Ziva, directly from the rules. And you know what? Let me do one better than that. Oops, shoot, hold on. Guys, for you guys taking momentum trades, no worries. So Ziva, what's a down bar? Let me open it up. Great question. What's a down bar? Well, a down bar means, let me find it. Here we go. A down bar means that your large chart is a down bar. It's a reversal bar. It's coming off of resistance, right? So to take a momentum trade by the rules, you have to have a down bar print. And then you start looking. So until the large chart gives you a termination, until the large chart gives you a reversal bar, you shouldn't be looking for that momentum trade over here. Does that make sense? Clear it up a little bit? Guys, I made this checklist for you momentum traders with pictures. Steal it, use it, study it. This is why you should be on Simulator until you're good, and that's exactly what Gary did. All right, Jay Solar. Jay Solar, I want you to remember that your charts are spread out over an hour and a half. So let me get back to the top of the room. So Jay Solar, we're at a weakening of a triggers. We're directly to fib at that printed right there, right? So that trade probably wasn't there right when it first happened, or that fib wasn't there. Weak triggers, divergence. Rule number 3, not met. You're saying that your trigger lines were outside, or your area was outside of your large triggers. I like it, especially with weak triggers, with divergence, with the weak triggers below. That's pretty problematic. It ultimately, and guys, this is the middle of the night. Things are being manipulated in the middle of the night. But it's a good look, Jay Solar. And I think it's a great avoidance. 50-50 trade, no divergence. Entry at the area, might have lost the trade. That happens on a 50-50 trade sometimes. Because price reacts to Fibonacci, right? And it may react beyond. And that's a 50-50 trade. That's exactly why it's not considered a high probability trend trade. Does that make sense, Jay Solar? I hope so. 50-50 trade, no divergence, absolutely beautiful. And there it goes. There was a divergence. Your rules say no. No problem at all. Great job following your rules once again. Jay Solar, eventually you'll get to the point when this happens after a good bottom. You may bypass one divergence. You may change your line of thinking. You may say, when I have this much momentum, when it's one area not broken, when the large triggers are smashing through and I'm coming from a good bottom, and I have strong triggers and a tiny window of opportunity, Jay Solar, this is a trade that you're probably going to grow into, and you'll take this trade. I love the look of this trade. But for the brand new user, for the person keeping it consistent until they're consistently winning, this is an awesome avoidance, and sometimes it's difficult because it means that you have to be okay with the market going without you. It's a great look and it's a great read. And I'm not telling you to change your rules, but for me, if I'm coming from a termination that creates a full reversal, I'm very comfortable with one divergence, and that's just me. And that's the one. Jay Solar, you've been busy. I love it. And have to ask, why'd you miss the first one? Termination, everything down, clear path, small breaking below. There's your pullback to resistance inside of favorable large triggers. And then it didn't get you on the second. It's a great pre-trade. I think that there was an opportunity before that as well. And then when it does make it, cost of doing business. Just a cost of doing business here. That's all it was. Does that make sense, Jay Solar? You had momentum. You had a clear path. Everything said giddy up, go to the downside. You had an area right there at those large triggers. Jay Solar, this is one of those 20 to 30%. This is one of those, damn it, it just didn't work. That's okay. It's a cost of doing business. Let's dust off and let's get into the next trade. Ooh, two teeth pulled. Yuck. Nope. You nailed it. And guys, this is why writing the rules simple helps, right? Jay Solar, I'm going to show you something. This is for everybody. Can you imagine if the only thing written on this chart was odds favorable minimum, no term, entry at area inside of favorable? If those were your three focuses on this chart, wouldn't it be easy to say, hey, you know what? That was awesome. This was a trade. This had a higher chance of winning than it did losing. I feel good about this trade. I can take this one. Does that make sense, Jay Solar? I like it. You're doing good with this because you're at a different point. But for the new users, sometimes writing those rules on the chart, guys, it gives you that peace of mind. You can literally say to yourself, oh my gosh, I had every advantage in place, and this is one of those costs of doing business. This is one of those trades, then it was absolutely beautiful, and it just didn't work. So Jay Solar, you put strong momentum. I'm going to respectfully disagree. It's not odds favorable, right? It's everything is up, but it's not odds favorable. Every trigger is up. It pulls right back to support. So the laws of termination conditions tell me this is an area likely to stop the market. So we're giving up a little bit of momentum, but you have a clear path and you have a perfect entry area. I wouldn't exit there. I wouldn't even consider exiting there. Because this is just a line on a small chart. Jay Solar, does that make sense? It's just a line on a small chart. Who cares? No, that's a 50-50 rule, right? First sign of troubles for 50-50 trades. You have a clear path, my friend, but you don't have momentum, right? So if you're losing momentum and you're losing momentum and you lose momentum again, that may be an exit condition. That might be a break even. Does that make sense? This trade has a clear path in an entry area. This trade doesn't have momentum. That's okay. It's a medium probability trade, which means that it has to be managed assertively, which means if that momentum dies again, it's okay to sit and wait, right? To get out, to preserve your capital. Great job. And Jay Solar, I'm not going to lie, I'm trying to cover all of these, but I'm all over the place. I don't know which ones I've hit and which ones I've missed. 50-50, no divergence, you get in, divergence prints, you take your profits. I like it. Great management. Whoop, same trade. Same trade. Jay Solar, did I get them all? Great job. Great posting. Oh, I like you guys, Zeba. But Jay Solar, I gotta tell you, you were light years ahead of where you were 30 days ago. Thank you so much for posting the way you're posting. There's so many great things, right? So many great things to take, guys. It's like this metamorphosis. You're going to keep growing every day. You're going to keep getting closer to where you want to be by doing the same thing over and over, creating repetition, getting recognition, right? And it's just going to make your life easy because you're looking for the same thing every day, every time. Ziva. Bum, 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 bum. Not a good top, right? Because it's a termination. It's not a termination condition that created a full reversal. Does that make sense, Ziva? Give me a Y if it does. Not a good top, so yeah. Great call. Not a good top. Absolutely, you've got momentum. Absolutely, it's a 50-50 trade. The large haven't broken through the one-to-ones, so you took a medium probability trade at the absolute perfect spot, and it didn't work out. Ziva, this is acceptable losses. This is a cost of doing business. This is just one of those, eh, I gave it the absolute best shot that I could, and the conditions were right. I love this trade, Ziva, and great for you for taking it. Nice job. Guys, you're going to hear me get excited about losers sometimes because you followed the rules to the letter. And we know that I can't win every trade. It's not going to happen. So the ones that I lose when they fit the rules, guys, I get excited because it means that you're committed to a plan. It means that you're committed to consistency, and it means that you're on your path to becoming a successful trader. And I lost my place. Let me get to my place real quick. So many pictures. Guys, if I seem rushed, I'm going to scroll down. Slow me down. Ask your questions, okay? Ace J. Here we go. Here we go. Ah! What got you in down here, Ace J? Got in at the pullback? In between the triggers? Oh my goodness gracious. Ace J, are you with me? Because you're brand new. I want to talk about what we see here. What direction is the market going on your large chart when you enter that chart? Your trend is down, right? Do you see it? Because sometimes we get caught up on the small chart. The trend is down, the momentum is down, the direction is down. We're below all of our areas. Everything says down, Ace J. Do you see it? Do you agree with it? Cool. No worries. Man, I love that you took this trade. Do you know why? Because it means that we get to talk about how odd and how rare it is that this trade wins, right? It's a lucky trade. And I'll tell you what, somewhere up here is a beautiful trade. And that little piece of patience, let the market do what it's going to do. Let the triggers on your small chart roll. If this is really going to be the bottom of the day, these triggers are going to roll first, right? It's going to set up that beautiful trade for you. These are awesome when they work, but I can tell you from my experience, they work a lot less than they lose. Um, and fighting the trend and fighting that momentum is one of the biggest killers for people. And it goes back to that book that John Novak wrote. I love posting this picture because it makes me giggle every time. How to commit financial suicide, guys. How do you take away so many advantages that your account dwindles? You trade against strong triggers or you trade into termination conditions. If you pull those two things out of the equation, it's amazing how easy your life can become. Honest, honest. Gary, weak triggers, right? Three divergences, and it didn't work out. You're welcome, Ace. We're going to do this every day. All right, guys. Can we talk about how checklists only work if you work them, right? I've got weak triggers, which means that I don't have the advantage of momentum, but I do have a clear path. I love that. But I've got one, two, three divergences in the same location. So I've given away the advantage of momentum. I've given away the advantage of actually just a momentum twice. Guys, you've got to resist the urge. Who cares if there's a mid-bandit resistance? If you have a termination condition, right? I don't have momentum, I don't have a clear path, but I sure did catch that loser. Does that make sense, Gary? And you may have had a good top way up here, but that was 70 points ago, right? No terminations. Odds favorable? Absolutely not. That's a no. 50-50. That's a no. Anything can happen. That's a yes. No worries. And guys, remember, I don't pass judgment on your trades. You do what you're going to do. My job is to come through and say, Gary, when you find yourself in a position where this isn't momentum and this isn't momentum, and if you didn't recognize the three divergences, guys, heighten your awareness. And that's probably that anesthesia fog. But look at this. 1, 2, 3, 4, 5. It's been printing divergences all the way down. My smalls are inside of the large. It's like textbook termination. It's all right. Gary, your trading is solid. Your reads are solid. But guys, the elimination of the unnecessary losers allows the winners to do more. If I take 10 trades and 3 of them lose and they're by the rules, no worries. I'm totally cool with that, right? It's a cost of doing business. But if I take 10 trades and I lose 5, but 3 of those losers are me breaking the rules, well, then it becomes problematic for me. Then I get to a point to where I'm giving my money away a little bit. And Gary, here is clear path once again. Now the smalls are outside of the large and only one divergence. You wait for a market flow confirmation. You get paid at the trouble spot, a second divergence prints, and you don't lose any money. Gary, great management when you're entering the market outside of that window of opportunity. Great job on that one. Abdul Aziz, smalls are below, one divergence. You take it up at resistance. Absolutely beautiful. The law, guys, I love this. Abdul Aziz, I found your niche, like your awesome spot. This loss of momentum says that it may push higher, right? Just a little bit. And Abdul Aziz says, well, if price reaches resistance and all my trigger lines are below, and I have strong triggers, it makes sense that that resistance may hold. And it's a beautiful trade. That was his pre-trade. What did it look like after? There's that third divergence, and he took an exit. Gosh, textbook beautiful. I will, PFI. I promise I'm going to go through the list from top to bottom. Everything you post, I promise to review. I love that you ask me, but you don't have to ask me. Save your finger strength. You only have to throw that reminder out there if I become a Yahoo and I miss it, and you got to go, dude, Mark, come on. And then I'll get it, I promise. All right, let me see where I was. Man, you guys are keeping me busy. I love this. Bum, bum, bum. All right, Jay Solar, I think we looked at his already, so we're going to bop down to Gary. And Gary, that's that strong trigger. Look, I like it. That path is clear. Divergence prints, you get in. So guys, let's talk about the perfect entry. And this is NASDAQ, right, Gary? Gary, are you with me? Because I know you were out for a few days. This is a great lesson for my NASDAQ users, not losers. I like the look, Gary. I like everything about it, right? You've got those strong triggers. You have the clear path. I mean, it's nice. And you do have one divergence, which is totally cool. Your entry was at resistance inside of those favorable large triggers, right? It was 3 bars to the left. No. And if you got in here, your risk was already reduced. Guys, one of the biggest things that I see, if your NASDAQ trade bounces off of small triggers, you have to wait for those small triggers to die. I'm telling you right now, if it bounces off of those small triggers after divergence prints, it's probably going to push higher on the NASDAQ more often than not. Go study your trades, Gary, and you'll see it. And at this point, if we bounce off, when I trade the NASDAQ, and this is just me, you're going to want to study it. I'll make sure that I get the best entry, and I'll take a contract off there. And I'll probably go break even at the fib, because if it bounces here, I'm out break even. And then maybe if it pushes a little higher, I'll look for a close on the correct side if the rules are still met. That's just a little NASDAQery, guys. The NASDAQ's a different market. You have to be on your game and you have to be focused. And there's some nuances that will change. They will change your outcome. And you have to manage a NASDAQ trade differently. Lady P, I believe that was your test. Rakesh. Good morning, Rakesh. All right, your large chart says momentum up. Odds favorable momentum. I've got a termination. I've got a 50-50. You're jumping in. Even your range shape chart has resistance, right? How did you pick your stop, Rakesh? Your trade is so outside of a high probability trend trade. And I know what you're looking for, right? You're looking for that momentum to carry you, yes? Okay, so Rakesh, stops go where the market shouldn't. Does that make sense? Give me a why if that makes sense. Stops go where the market should not. Okay, so just for instance, if I have strong triggers, right? And let's assume that the path is clear. Does it make sense to have a stop loss at an area of support inside of favorable large triggers? Because Rakesh, wouldn't this be the perfect spot for a trend trade? So one of the things that happens, Rakesh, if you're going to take these just jump in trades, right? And you had momentum, but that 80-20 area may hold. That mid band may hold with these large triggers so far away. If you're going to be this aggressive and just jump into the market, you do whatever you want, but man, I'm not giving back $100 because if that market does what it does more often than not, if that market retraces back to support inside of favorable large triggers, I want to go long. I don't want to exit a trade. Does that make sense? And this is that patience piece, Rakesh. I'm a big fan of this trade. Well, I have no place to put it. And I have no place to put it, Rakesh, because I don't have any idea why you would just jump in here when that is still a termination condition. Does that make sense? So maybe if I were going to say, where should the market not go? I don't know, maybe down here below my large triggers. And that's an astronomical amount of risk, right? So Rakesh, if you're going to create a plan with this entry, you're going to have to create a plan for management, and you're going to have to test that management. But an arbitrary 10-tick stop is a difficult stop to manage because that arbitrary 10 ticks may be at an area of support inside of favorable large triggers. It may be sitting at a Fibonacci area, right? So while I'm not anti this trade at all, and there's people that take this trade very successfully, but they've got a very solid set of rules to take the trade. Just because you break above blue support here, remember that the large chart leads the way. And if you don't have a clear path on the large chart, it becomes difficult. That clear path on the small chart isn't as important. Does that make sense? I see that your stop's outside of the blue fib, but it's right at another area of support, right? So you're banking 100% on this fib, holding the market and stopping it. But with these large triggers all the way down here, doesn't price tend to pull back to large triggers? which is well far away. I think it's a great trade, and I think there's an opportunity. Um, but I would take this picture. How did this trade turn out? Do you have an after picture? Because that's the second half of formulating a plan, guys. The entry pictures are great. But what happened after? Did you get to your profit target? Did you get to something? Or did it hit something? And then did it turn around on you, right? Um, and getting those after pictures are going to be just as important as those entry pictures because you got to figure out what's happening after the trade. So the profit, you wish you had not had 20 ticks profit, otherwise you would have made more. All right, then this may be your trade. Outstanding. And now I know. Now when I look, when your small chart breaks an area of support or resistance, you're jumping in and you're looking for the next fibs when there's momentum. See how that? Now we have a plan. Now we have a set of rules. Now we have a way to make sure that you're consistent, that you're doing the same thing every time. Rakesh, these are how great plans are built. Guys, I don't judge your trades because a lot of you take trades that I would never trade, but that doesn't mean that they're wrong. It just means that they're not for me. I prefer brunettes. Doesn't mean that blondes aren't great. I just prefer brunettes, right? All right. Paul says, strong triggers, no terminations, two divergences, area for entry inside of favorable large triggers. Paul, I would wager to say that you have a high probability trend trade on your hands here. Nice job. Is it just me or is this class fun? I love seeing y'all's pictures. I love what you're doing. I love what you're posting. It's awesome to see you guys following rules. It's awesome to see you guys working things out. All right, all charts agree it's a good top. What does that mean? That means three divergences on the large chart, right? There's one of those instances where three divergences on the large chart says giddy up. And then I'm trying to see where your entry was. Alan. Oh, Alan. Alan, are you with me in here? Ah, we have a picture for Ace J. Heck yeah. I love seeing y'all's faces. So, Alan, this is one of my challenges. So, this termination condition, right? Guys, can we all agree that this is amazing? Three divergences in the same location. The trigger lines get below the fibs. Alan, I love the top that's in place here. And man, it's awesome. But to form the opinion that these one-to-ones, this Fibonacci support, and this divergence low should break because of a great top, this is going to get your butt kicked 99 out of 100 times, right? If this were a 50-50 trade, Alan, if the trigger lines had already start breaking through that area, this strong top is a huge asset. But you're trading into a wall, an absolute wall of support here. Does that make sense? The wall of shame. You know, people used to call them the yellow dots of death, too. This is an absolutely beautiful trade. Without this, textbook could teach a class on it termination condition. Does that make sense? And I know that a great top is an awesome, awesome thing, but man, termination conditions, full reversals are fantastic until the next termination condition. And Alan, you'll be able to utilize these great tops when this creates that 50-50 scenario. And Jay, I remember that you asked the question, what's a 50-50, right? Were you looking for an HVA trade? So your HVA trade never really set up because you reached the target first. Does that make sense? Yeah, rule number 2 not met. Perfect. Great job. And what you're going to find too, Alan, is these HVA trades, this is just a trend trade. HVA trades are going to happen up here close to that termination condition. By the time you get down here, by the time there's odds favorable, by the time everything is rolling and cranking, this is just a trend trade that happens to line up with an HVA line. Does that make sense? Cool. Great picture. All right. Ace J. Guys, this is for everybody as we talk about 50-50s. If no triggers go through the area, there's not a clear path. It's a termination condition. Rule number 2 is not met. We just saw a great example of that. This is easy to recognize, right? Smalls and large make it through the area. This is awesome. We know that the path is clear. Here we go. We're zooming to the next area, and we're looking for continuation with those strong triggers. So Ace J, when I say 50-50, 50% of my trigger lines have made it through an area with odds favorable momentum. My triggers are their absolute strongest, and the small triggers have smashed through the area. Not eked through the area, not just barely made it through the area. They have smashed through that area. But my large triggers haven't made it yet, which means that the area has the potential to break with all that momentum, but it's not a clear path. Does that make sense? So in the beginning, it's black and white. It's either not broken or it's broken. And then you're going to move into the scenario where you see areas with the potential to break, right? But if it's not a clear path, then we've forfeited that advantage, and we only have 2 out of 3 advantages in place. Momentum, and we have to make sure that we have the area. And we want that area to be small, and we want that area to be solid and concise. So when you start looking at these 50-50 trades, Ace, and what it is this is your next step in the plan. When you learn to read your charts through that high probability trend trade, give it 30 days of hardcore study, right? But when the smalls are through the area, but the large are not, and see how the smalls are through pretty decidedly, and those large are cranking down crazy strong, you're looking for an entry that is free from divergence, that has strong triggers, that has a tiny little window of opportunity, and this creates an advantage. And then that advantage grows even more if the market is coming from one of those termination conditions. And this ultimately becomes your second trade, that 50-50 trade. And it's an outstanding trade, but it's not a high probability trend trade. So hopefully that clears it up a little bit. A 50-50 trade forfeits the advantage of a clear path. Let me see where I'm at here. I really appreciate how busy you guys are keeping me. All right, Paul. I'm not sure what got you into the short at 43. Hoping for some continuation because there was no divergence, is what I'm guessing. But you didn't have odds favorable, not yet. Your trigger's flat, the smalls are up strong against you, and then nice recovery. You're going the other direction with it, but it stopped you out, right? Guys, indecision, lack of momentum is going to create challenges. No, it's not 50-50 risk, Ace J. 50-50 has nothing to do with the risk. 50-50 only has to do with the look of the trigger lines. Half are above, half are not. That's all it is. It has nothing to do with your chance of survival. Does that make sense? It's nothing more than a reflection of trigger line location. Yep. So Paul, no momentum, no areas inside of favorable large triggers. And then over here, we hadn't gotten momentum yet, but we'd lost it twice. These are 2 losers that are pretty avoidable, I think. And it's just sitting around waiting for the best of the best, insisting that your money is worth it. Good pictures. Scrolling, scrolling, scrolling. All right, PFI, we answered that question. Gary. Gary says, odds favorable, everything cranking, perfect entry, beautiful exit, fourth divergence prints, and he takes his exit. Gary, rock star trading, man. Great job. Great job. Telling you guys, it's fun for me to watch you guys grow with the software. It's fun for me to watch you develop confidence and take those perfect entries. 50-50, smalls below, large above. And then Safia, that's a beautiful momentum trade. That is an awesome, beautiful NASDAQ momentum trade. It's not the classic from a termination condition momentum trade. And guys, this is one that you're going to come through later. When the momentum is strong, when everything says down, when your small triggers on the chart are just cranking, the bodies of the bar break the one-to-ones and you get that little stab back. This isn't the momentum trade in terms of coming from a termination, right? Because we didn't. This is just huge momentum, and there's that little stab back to the one-to-ones right at the mid-band, right with the triggers down. This is your patience piece, waiting for that. Everything agrees, and you did it perfectly, Safia. Nice job. My babies is all grown up. And then Paul says, dun, 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 termination, full reversal, odds favorable momentum, perfect entry. And Paul, I sure hope that one worked out as well as your odds of survival said that it may. And Paul taking little momentum trades in there. I see you. Guys, it's perfect, isn't it? Odds favorable, no terminations, everything says down from a termination. And look at Paul getting that entry right at the mid-band, right inside of favorable large triggers. I could teach a class with this picture. Love to see the results. Gary, everything says down with losses of momentum. You get in with only 2 losses and strong triggers. Nice entry. Third divergence prints and you ignore it and it works out for you. Nice job, Gary. All right, Debbie, everything says down on the S&P. Smalls below the large are wide. You get in on same thing, momentum style entry, right? Nice momentum style entry, Debbie. This looks exactly like Safia's, right? The bars break through, the momentum is strong. You take that little pullback and giddy up. Nice job. Are you and Safia on Messenger? You guys like, hey, let's take momentum trades today. It'll be cool. We'll show off for Mark. Nice job. Telling you guys, I get excited. I get excited when you do well. It makes me happy. And here's Paul just imparting a little knowledge, right? Everything says down, we're cranking, but the triggers roll. But man, it's a termination and the triggers are so far down. And Paul's saying, I'm just not ready to commit my money. Not on this look. Not yet. I like the picture, Paul. And then Jared, are you with me? Cool. Hey, Jared, you want the keys to the kingdom? I'm going to give them to you right now. Take your picture, all right? Where are we coming from? What do you think? Is it a good top, Jared? It's a termination that creates a full reversal, right? That's awesome. And then let's do this. Odds favorable momentum. You see it? Perfect. And then let's talk about the termination condition or the lack thereof. And I think this is such a great lesson for so many people, and I appreciate that you would post this picture, is you were a little worried that it was a tick or two away, right? And you're thinking to yourself, oh my gosh, I'm getting close, and that's horrible because how am I ever going to make money? It might be a termination. Jared, this is a target. Until price reaches that area, it's simply a target. Because why? Because it's not this tiny little amount of space, right? It's coming from up here at 80.21. The pullback is all the way up here. So you've got plenty of room to get back to that fib that's off in the distance. Does that make sense? And this is why I embrace that recipe so wholeheartedly. Price reaches the area. Price, yeah, and you took it. And look at your entry right at a midband inside of favorable large triggers. Jared, how do you feel about the trade? Would you take this one again? Yep, Jared, I would lose money on this trade every day, every time. I would not hesitate to take this trade. This is a cost of doing business. And I love that you posted this one. And Jared, I got to tell you, you didn't need market flow confirmation, did you? Because you had a termination that creates a full reversal. You had odds favorable momentum. You had a clear path. You even had no divergence on a pullback to the midband. Jared, you should have been in at 31 with about 3 ticks of risk on this trade. Guys, when I tell you that this is going to screw your day up, when you start adding things into the mix that don't need to be there, Jared, it cost you a bigger loser, didn't it? You were in at 21 instead of 31. That's an extra 10 ticks of risk. That's if you were doing that $100 profit, Jared, you got paid and were break even. Does that make sense? Guys, market flow is awesome. Confirmation is amazing. But if you don't need it, great googly moogly. Don't wait for it, right? You had the prettiest. Jared, it's a great trade, man. I'm glad that you took it. I'd love to see you take it from the area next time. If it were one of those 50-50 scenarios and you wanted a little confirmation, all day long. But when every rule is met like a rock star, oh, dude, just take it. Take that trade because we're managing risk by getting in at the area. Great picture. Thank you for that. If you take a 50-50 with divergence, you better take it from the bottom of the window or no trade. I like that Paul's created this rule for himself. Paul says with odds favorable, 50-50, and it's 50-50 on 2 spots. It's 50-50 on a divergence high, and it's also 50-50 on resistance. He says if he gets a loss of momentum, he'll take it at the bottom of the window. Paul, that's a great addition to your set of rules, I think, because you see it a lot, don't you? The white paint bar? That was a breakout bar from a reversal bar from resistance. After a reversal bar with resistance that created a high volume area. Paul, that's where this 50-50 trade is most likely to fail if it's going to fail. Does that make sense? White bar into the area is great, but man, if it's coming off of a reversal bar with divergence from a fib, that's a breakout bar. That's going to create an HVA line against you. Your profit target there was perfect. In Zeba, do you see how that happened? We talked about it yesterday. When you get that HVA line against the trade, it becomes a great place to take profits because that's the most likely spot for that next divergence against you. Paul, great trade, great management, awesome read, and I love that you have such a solid entry plan. David B., always good to see you. The momentum is stellar, right? That one didn't make the area. That one made it beautifully. You make your money. And then we hit Fibonacci resistance everywhere. That's a great profit target, right? And you knew that. That's a great profit target, David B. That's a beautiful entry. Great patience. This one didn't hit it, and you said nope. And it came back and said, oh, sorry, David, we forgot you. What do you say we get you to that next spot? And it carries you right to Fibonacci resistance. And then you made the choice because of the momentum going into the area, because of the strength, because of the good bottom. You said, I've already been paid. I'm going to take it one more time and I'm going to manage it assertively at that same red fib. Guys, remember when I said that odds favorable momentum will cover mistakes? Odds favorable momentum will give that trade that typically loses a fighting chance. David traded directly into Fibonacci resistance, but the momentum was so damn strong the market couldn't slow down. And the buyers fought one more time right to that key area, and David capitalized. David, this is an outstanding trade, or outstanding set of trades. Nicely done. Nicely done. You know, I used to take 2 breaks. I don't take 2 breaks anymore, guys, because you are amazing and you're keeping me busy and I love it. All right, Rakesh, here we go, bud. Rakesh, do you have a rule that says large chart candles inside of the triggers? Or do you have a rule that says odds favorable momentum, no terminations? Your rules may be different. I couldn't care less where these candles are. Right here? This was David's chart. Yeah. The candles are inside of the triggers? That scares you? That's okay. So, Rakesh, when I talk about odds favorable momentum, and I like that you put that, guys, everybody's entitled to read charts the way they want, right? But Rakesh, when I talk about odds favorable momentum, I'm very, very clear in that first hour. When the small triggers are outside of the large triggers, these price bars are not your momentum indicator. These price bars are just price. But when the smalls are outside of the large, when both are wide, when both are angled in the direction of the trend, I have odds favorable momentum. I have a market that's likely to continue in the direction of the trend. My candles might be outside, they might be inside, they might be on the wrong side. I'm not worried about that. You'll notice that as momentum wanes, the candles do come back in, but even though they're inside of the small triggers here, the momentum is outstanding. The momentum is everything that I look for, and the momentum is outstanding on David's chart. The momentum is everything that we look for to start the process of a trade. And there's a reason that when I talk about momentum, guys, I don't reference price bars. You can go through every video on momentum that I've ever spoken, and I never reference the price bars, not once. I talk about the separation of the small and the large and how it creates an advantage. So Rakesh, odds favorable momentum, smalls outside of the large are wide. They're cranking to the upside. 3 divergences can be a problem, right? You enter the market at the divergence level. Did that one push down lower to support inside of favorable large triggers? Or did it go from there? Just curious. Do you have after pictures? Rakesh, I would love to see after pictures. I love your entries. I'd love to see what's happening after the fact. I'd love to see how these trades turn out because I think that you're creating a very unique style for yourself. And it's interesting to me. Daryl, great top, strong triggers, no terminations. You get in perfect. It doesn't work, right? So you take it again at the right spot, and it doesn't work. Daryl, this one had every advantage. If you're going to take the first one, I see why you took the second one. Your stop, Daryl, are you with me? And Rakesh, this is what I was talking about earlier. Daryl, your stop is at an area of resistance inside of favorable large triggers, isn't it? This is a trend trade that didn't work. But do you see how your exit is where your entry should be? You're literally jumping ship on this trade right where you could be entering the trade. Does that make sense? And guys, this is something that new users do a lot is they get in and they're like, oh my gosh, I don't want to lose, right? I don't want to lose, so I'm going to go break even. And that's cool. But if your rules are met, Daryl, for a high probability trend trade, if you have odds favorable momentum, if you have no termination conditions, if you're coming from a good top, you have to be committed because are the rules still met for a high probability trend trade at your exit? Does that make sense? The rules are still 100% true for a trend trade there, so it doesn't make sense to move your stop there. Behind the reversal bar, absolutely. A little higher up, but definitely not inside of favorable large triggers right at an area. And this one takes a while, guys, and this is why entries are the first thing that we do, and management is the second, because in the heat of the battle, right, when everything's going on and your adrenaline is at its highest, in the beginning you're not going to recognize these things, and that pragmatic approach does wonderful. Had you taken profits on the first break even, definitely would have made sense. Gary, you didn't take the HVA because the triggers had not rolled, or did you miss a momentum trade? Which are you looking for, the HVA or the momentum? You had divergence, so it's not a momentum trade because divergence is a loss of momentum. But your pullback right here to an HVA, right at the small triggers that are up, the large triggers that are up, after that, you could have taken that HVA for sure. The rules for the HVA say at large triggers that have rolled or at strong small triggers in the direction of the trade. PFI, you got stopped out. You most certainly did, my friend. Are you with me? You still in here? Or are you with that 6-month-old? I guess if you're with the 6-month-old, you're not going to answer me, are you? Cool. So PFI, we got a couple great lessons here. And let's start on the large chart, okay? Dun, dun, dun. You tell me. Did you have odds favorable momentum? Were the small below the large? Were the large wide? Were they angled in the direction of the trend? Sort of. Hell yeah, you did. There is no sort of in trading. You either do or you don't. Well, those scissors were cranked super wide, weren't they? So I want to talk about something. And man, this is that next step, right? We're going to do two things. The first thing that we're going to do is we're going to go back to the user guide. And we're going to go back to our terminations, guys. And I don't talk about this in the very beginning because I want you guys focused on the areas. I want you guys focused on those strong lines, right? Recognizing termination conditions in their most basic form. PFI, we're about to take you next level. You guys that are working on terms, we're about to take you next level. The last termination condition on this picture says a large chart midband if the large triggers are a full bar away. The large chart midband can behave as a termination condition if the large triggers are a full bar away. So what we have here, PFI, is what we call the gap theory. If price accelerates away from those large trigger lines, away from those synthetic trigger lines, and it reaches a fib or it reaches a midband, it's likely to close that gap back to the large triggers. And we call this the gap theory. So if price accelerates and it reaches that midband, even if it exceeds it a little bit, but those large triggers don't follow along, then the gap theory is in effect. And that gap theory, PFI, is not a reason to go long, right? What the gap theory is it's saying because price accelerated so far and so fast away from those triggers, I'm going to sit on my hand for short trades until that gap is closed. And this is one of those patterns that we recognize. When price accelerates so far away and it reaches that midband, See how the large triggers have room to go and close that gap? And that's exactly what happens. And that keeps you out of that short. And the other thing that might have kept you out of that short, or at least given you a fighting chance, is not only did you jump into the trade at the very bottom of the move, you were stopped out before it ever even retraced back to those large triggers or the areas inside. You remember rule number 3 that says that we're going to buy a pullback to an area inside of favorable large triggers? And favorable large triggers means that they're trending one on top of the other. So PFI, if you had taken a trade somewhere right about here and gotten stopped out just above, absolutely perfect, picture perfect. But this gap theory, you bought the pullback. Where's your pullback? Awesome. So this is where language becomes important, right? Oh, where do entries happen? Thank you. See, now we're getting to the root of the problem. And guys, this is why posting is so important. PFI, respectfully, it doesn't matter because it's not part of my rules. My large chart gives me direction. So let's go through and let's look at your chart, and I'm going to go back and forth. Large chart gives me direction, right? Your direction is down. Large chart gives me momentum. Your momentum is down, right? When I'm done with direction and momentum on a large chart, my entries come from a small chart, and my entries come from an area of support or resistance inside of favorable large triggers. This is one of the reasons why I'm so adamant about you guys writing your rules on the chart. Because if you had written on your small chart, entries come from an area of resistance inside of favorable large triggers, you would have posted this picture and you would have said, damn it, Mark, I got in right here and it stopped me out. What did I miss? Because my rules say pull back to an area of resistance inside of favorable large triggers. In PFI, that's when we start talking about the gap theory. Does that make sense? Guys, when I talk about writing your rules on your chart, oh, beautiful. When I talk about writing your rules on your chart, guys, I can read your charts. I can read every ounce of information on your charts, especially after the fact. Pull back to the, okay. PFI wants to fight. You ready? And this is a big smile on my face fight. This isn't like a grrr. Pull back to the midband on the small chart as well, right? Is it inside of favorable large triggers, PFI? No, see? And this is where I think writing out the rules is so important. Rule 3, whoops, not 4. Rule 3 says, sell a pullback at an area inside of favorable large triggers. PFI, this is an amazing picture, and I want you to know that I'm thankful for it, and I'm not fighting you at all because there's absolutely no fight here. So rule number 3 says that when this reversal bar prints right here, you're comfortable with that, right? When this reversal bar prints, I can take my shape tool and I can go from the top of my triggers to the bottom of my triggers. And let's refine this just a little bit. Make it easier to focus on. So from the top of my triggers to the bottom of my triggers, from the lowest point of resistance to the highest point of resistance, this is our window of opportunity, PFI. This is that area where the market is most likely to continue. Does that make sense? And this is why we use that small chart, because it lets us refine that large chart. You know, the large chart is a slow moving chart, and the large chart, what happens in just one bar, that one bar, where did that go? There it is. That one bar that gave you that momentum, yeah, that's it. Keep them inside. Total. I love kill zone. I'm going to use that. But look at what happens on the one bar with the momentum, one bar with the clear path. It's all of these bars on the smaller, faster chart. And that's how we're able to reduce risk so much. And that's how we're able to get the absolute most out of every trade. Because if we just wait for that pullback, it makes life a little bit easier. Does that make sense? And PFI, I'm going to tell you right now, if you keep doing this, if you keep posting the way you're posting and asking these questions, you're going to get back. You're going to get exactly to where you want to be. So let's define favorable large triggers one more time. Let me put this picture in the room for you. We're going to buy or sell, right? A pullback inside of favorable large triggers. Favorable large triggers are wide, they're angled in the direction of the trend. So here's some great window of opportunity pictures for you guys. Oh, what a great way to rock out class towards the end. Here's our reversal bar. From the top of the triggers to the bottom of the triggers, I've surrounded them with this red box. But price comes from an area of support inside of those favorable large triggers. Fibs, mid bands are yellow 1-to-1s. And here I have a yellow 1-to-1 as well as a mid band. This creates my window of opportunity. My stop goes outside of the window. And this blue fib is outside of that window, right? It's outside of those triggers, PFI. So I don't consider this part of the equation. It's not part of that kill zone as you're talking about. The reversal bar prints. I look from the bottom of the triggers to the top of the triggers, and I only have one line in there, one area, a mid band. This becomes the area where the market is most likely to continue because price loves to close the gap back to those triggers. These 1-to-1s, these three fibs are all outside of the large triggers. Therefore, they're outside of that window of opportunity. Does it make sense? And I'm telling you guys, it's that repetition over and over. And I promise you, it's going to become more and more clear. Yeah, keep them coming. Because these lessons aren't just for you, PFI. They're for everybody in the room that needs just a little bit of help with that. But this is why, and I hope that you guys start to believe me eventually. This is why I think it's so important to write your rules on the chart, to have that checklist, to make sure that you're using the words buy or sell a pullback at an area. PFI, the only bulls that I care about are the ones that I turn into ribeyes and throw on my grill. That's it. That's the only bulls that I care about. The only bears that I worry about are the grizzlies that want to eat me when I'm camping. Do you know what I care about? And I know that that sounds silly. PFI, you'll meet me one day, I'm sure. And what you're going to find is that I'm not the smartest man in the world. I can read the hell out of indicators. But because of my limitations, I have to give myself only two options. I have to give myself rules met or rules not met. I have to give myself either advantages are there or I do absolutely nothing. Because if I begin to form opinions, if I begin to say things like, it's a bullish day, it's a bearish day, I'm going to take a trade in this direction even though my rules aren't met, PFI, I get laid to waste almost instantly because my opinions are the absolutely most expensive accessory that I have in my trading plan. Does that make sense? Thanks. I'm telling you guys, in PFI, you don't know me that well. I started reading the software. I started using the software after my second spine fusion. I couldn't go back to my career. Um, and I did everything wrong. Everything wrong. My brother told me to take pictures. My brother told me to participate in class. My brother told me to use the spreadsheet. And I thought because my name was Novak, I didn't have to do that. And I was separated from 5 grand of my money in almost no time at all. You're in the same boat, Ace? Man, I'm sorry. Wouldn't wish that on anybody. But I'll tell you what, this is a great career that gives you a chance to walk around. So what I did, PFI, oh, it does, right? But it doesn't have to. And that's the thing that I realize is it doesn't have to happen. Yeah, everybody has that story, right? But now you don't have to. And let me show you why. PTSD. All the more reason to follow the plan, right? All the more reason to post trades. All the more reason to use a spreadsheet. All the more reason to learn the rules, to practice the correct rules. All the more reason to simplify. Yeah, Mark Douglas is amazing, right? Focus on the execution, not the result. Oh, I've got it, right? Here we go, guys. Here's your video watch list. Tops, bottoms, Mark Douglas, everything. There it is right there. Download it. So what happens, PFI, and for you guys that are brand new, that haven't blown out that account like I have, like PFI has, what you can do is you can learn your plan, you can practice your plan, you can get feedback on your plan. You can always take the correct trades. You can kick ass and take names on simulator. And then when you think you're ready to go live, you visit one of these prop firms, right? You test your plan on their platform, guys. And I'm telling you, for I think $90, you can control $50,000 in equity. And if you pass their plan, you can get funded. You can trade live money. Absolutely. And then you're funded. You're there. You keep 90%. It's amazing. But you don't have to blow out 20 grand. You don't have to blow out 50 grand. I know people that have lost hundreds of thousands of dollars practicing in the live market because they said, you know what? It's not real if there's not a skin in the game. Bullshit. It's real every time. The patterns are the same. The patterns don't know if the money's real or not. There's no reason to blow out accounts anymore, guys. Blow out Apex accounts, right? Blow out Apex accounts. Blow out 50 bucks at a time instead of 5 grand. That's up to you. You'll make your own trading decisions. Your husband lost almost $1 million last year. There's no reason to. There's no reason to anymore. And you know what? Thank God that he had $1 million to lose, right? That's okay. Last year, Ziba, I had a friend that gambled away a $500,000 in the casinos. And he sent me a text every time he won 10 grand, but he didn't send me a text every time he lost 30. And he lost 30 a lot more than he won 10, right? So guys, you got cocky playing when you went live, made a few bucks, gave it back a little more, not crazy money. Yep, that's it. Daryl, it's great to have you back in class. I'm telling you guys, there's nothing that can't be fixed. There's no path that can't be corrected. The only thing that you have to do to get to where you want to be is follow that simple plan. Guys, give me an opportunity to give you feedback. David. Guys, give me an opportunity to give you feedback. Give me an opportunity to tell you what you did right and what you did wrong. Give me the opportunity to put you on a path to correct the things that are taking money and to exemplify and go through and show you the things, the patterns that are proven to make you money. Give me that opportunity through posting in class. If you sit on the sidelines and you never post, well, you're getting exactly what you're putting into it, right? You're going to get out of it exactly what you put into it. Post your trades and use the spreadsheet. Study that spreadsheet every morning, guys. Ask a million questions. Gary said he thought he had a perfect setup. He had odds favorable. He had no termination conditions. He had a beautiful entry inside of favorable large triggers. Gary, what's not perfect about this setup? Why on earth did you write the word thought? You're a Navy man. You should have put I effing had the perfect setup. Right? Navy men swear. I know. Gary, it's perfect. It's picture perfect. It's 100% perfect. It's everything that you could possibly hope for. And it's a cost of doing business. And guys, let's finish the class with that. Give me a why in the room. Can you be okay with the fact that every trade can't be a winner? And then the second half of that is, can you be okay that if you follow the rules and every time you execute a trade, it's a pattern that's been proven to win more than it loses, you give yourself a higher chance of success? The odds of you winning go up exponentially. Debbie, I may have, or maybe I clicked on your first picture. And I'll tell you what, while I go find yours, Ziba, that's just beautiful. Debbie, I'm looking. And I'm sorry, there were so many pictures today. Debbie, we got this one. And we talked about it, how it's more of a momentum style entry, but it worked out beautifully. Was there one before that? It was after? All right, let me scroll one more time. Ah, there you go. I'm so sorry. And guys, always do that. If I miss a picture, and there's that momentum style again, Debbie. You let the body of the bars break through that little snapback with all the momentum. You're kind of going outside of that odds or that high probability a little bit, and you're using your ability to read charts to take advantage of all that momentum when an area breaks. Was that your intention? Then beautifully done. Perfect execution on your short and your long. And guys, this is what happens when you learn to read charts. When you put in the time, when you get the repetition, what's going to happen is you're going to begin to develop this awareness that creates more opportunity. Beautiful trades, Debbie, going both ways. Teacher's only as good as the students. All right. Edge trade short. Abdul, this is a hard one for me because I can't see your largest chart, right? I can't see your largest chart. I can't see if your 21-3 had odds favorable momentum and no termination conditions. And in order to take an edge trade, Abdulaziz, I have to have that information. Edges are great, right? But it's also directly into termination conditions. Does that make sense? What did your 21 look like when this happened? Do you have a 21 chart? I'm going to build one real quick. So, Abdul, if you're taking edge trades, but you don't have a 21-3, you're not giving yourself the information that you need to be successful. So in order to take an edge trade, in order to believe that this area of resistance is going to stop the market and continue down, this chart has to have odds favorable momentum to the downside. So Abdulaziz, if I look at this 21-3, is there anything on this chart that suggests that that area of resistance is going to stop the market in its tracks? Nothing at all, really, right? So Abdulaziz, if you want to take these edge trades, I'm going to suggest that you build a 21-3 chart. Yeah, exactly. So the same way that the 21-3 has to say, and let's see if hypothetically, let's see what happened over here with that odds favorable. Hamid, Mr. Novak is my father. Here's the whole list. There's the 4 videos, and then there's also Mark Douglas videos right below it, which are outstanding. So Abdulaziz, let's look at where that other circle went. Not an edge trade. Let's see if we can find one of those potential edge trades on the snapback. You're welcome. This would be one of those areas for an edge trade at 917. So what does it look like? Whoops. At 917. Let me pull up my 21. And check it out. Abdulaziz, at 917, I had odds favorable momentum and a clear path. Do you see how the largest chart gives me an idea to support that this edge is likely to hold to the downside? Does that make sense? Awesome. So let's end it with this. Let me give you a picture so that you can build a 21-3 chart just in case you're not comfortable with it. And if you want to take those edge trades, I'm a big fan. But you have to have that little extra information, and it'll keep you from getting run over when you're hoping something is going to hold rather than it telling you that it's going to hold. Thanks for posting that picture. I think that's a good lesson. Guys, you're going to be able to add trades and you're going to be able to add time frames and all sorts of stuff to the mix. You just you got to make sure that you know which tools you're using and use them correctly. So great job, guys. Great class today. Thank you so much, everybody, for your participation. Thank you for being here. Those of you that are too shy to post today, I want to see you posting tomorrow. If you are studying this afternoon and you have questions, write them down. Bring them to class tomorrow, guys. We're going to do this every day until you get to where you want to be. I'm going to go look for some high probability trend trades. Thank you, Ziva. Beautiful horses, by the way. I'm scared to death of horses, but they are absolutely gorgeous animals. I will see you guys in the morning. It's Friday tomorrow. PFI, don't let me forget. If you need help tomorrow with setting up market replay, I want you guys to remind me. That'll be the last thing we do in class tomorrow is I'll set it up on 7 and I'll set it up on 8 to make sure everybody gets